Yo, hello everyone. Welcome to another stream. I wish you all the best for today's trading day. Whichever session you're in, you can put it down. So in the comment section, are you in the London session? Are you in the New York session or in the Tokyo session, which is basically Asia session? I think most of you are New York sessions, so basically from the US, Maine, India. Okay, so we have a nice mix of all sessions actually. London session, nice. We have someone from the London session as well. I'm in the London session. I am London +1, so basically Croatia. It is currently 12:30 where I am at, and 11:30 in London. New York, cool, awesome. So in New York, it's pretty early, I believe. Let me check. So if I open up current NY time, yeah, 6:30. You guys wake up very early in the States. In Europe, it's a culture of waking up at, let's say, 7, maybe even 8 a.m., depending on where you work. In the US, there's a culture of waking up at like 5 in the morning or 6 in the morning. I would say that's too early, and you guys are crazy. Max says, just look at what I sent you in the Discord. Might be a crazy projection. Okay, no worries, Max. I'll take a look. I'll take a look later today. And welcome to the stream. So let's get started. Let's see what we can see. As far as my trading goes, I'm still in Swiss yen. I'm still holding my short position on Swiss yen. The thinking here is that long term the yen will gain strength, so the yen should appreciate in value. I already took 60% off. I'm holding 30% at the moment and letting it run for now. The stop loss is set. The trade is in, so let's keep on monitoring the situation. I'm looking to take new positions. I definitely am. It's a bit tough because I'm getting conflicting signals. I want to sell the dollar. I definitely do want to sell the dollar. I think that is the main theme. That is the main trade. Let's just run through the DXY. The DXY kind of recovering today, but I do think long term selling the dollar should be a good way to go. The problem that I have at the moment is that the Middle East is not or has not yet been resolved. We were supposed to get the opening of the strait yesterday. I think that was the big announcement. If I run it through financial juice, market moving. Yeah, so see, US Treasury Secretary Bessent, we may have an Iran deal tomorrow to open Hormuz. Didn't happen yet. Could happen, absolutely, but it's Trump. So the uncertainty is very, very high. Now, oil has sold off quite a bit. I'm not really looking at the US oil. I'm more looking at Brent oil, because Brent is a better indicator for the price of oil. Okay, Brent is a more accurate indicator for the world price of oil. So US oil is fine, but Brent is a bit better. And the Brent has sold off as well. So from the peak here at 95, we are down 12%. That's substantial. And we are back below back in the bottom of the range. If we identify this as the range, we are now sitting at the bottom of the range. So that's what's problematic to me, because if the strait is not open, oil will probably have another leg up. The dollar will catch a bid, probably. So my idea could easily get stopped out. That is why possibly being patient this week and waiting for the NFP print this Friday. Let's take a look at the news calendar. So NFP print is coming up tomorrow. And I think the best way to go is to wait this week out to see if we actually get the opening of the strait. And if we don't get the opening of the strait, then we will see what the market thinks about that. and we see if the NFP is stronger than expected. So yeah, maybe we can get the NFP to pass. So let me run it through the poly market. NFP August has the volume gone up? No. So the volume is still super low, very unreliable, I would say. 48% chance of 50K to 100K. So that's kind of similar to the forecast on Forex Factory calendar, around 85K. So yeah, it coincides with what we're seeing there. If you look at the unemployment, this is going to expire on January 10th, 2026. So this is not really that's something that is super relevant. Let's see, PPI volume is low. What about the CPI? US CPI. July inflation ends in 6 days. Okay. Let's take a look at what does the market think about inflation. The volume is actually okay, $146,000. Okay. Let me see next week. Yeah, next week is the core CPI print. The forecast is still not in, but you can pretty much rely on this, right? You can rely on poly market. So the bet is that it's just below 0.1%. 67% chance that the inflation is below 0.1%, which means probably a small increase. So a small increase in the CPI, which again is a bit bullish for the US dollar, but I would be happy to ride through the CPI, if I'm being honest. It wouldn't be such an issue for me. The NFP is a bit problematic. And the biggest problem, the biggest issue out of them all is the Middle East. So, yeah. South Africa, Egypt, Nigeria. It might be interesting to discuss in the stream, I mean. Okay, give me 1 second. I'll take a look. So let's take a look. Okay. So I'm not exactly sure how I can open this up on the big screen. Yeah, I'll have to look at this a bit later. I'm not exactly sure how to open it up on in my browser. I can download it, open in browser. Okay. I actually can do it. So let's transfer it to my smaller window. Okay. So this is what Max has sent us. And Max, if you can discuss this a bit more. I see the comment. My wish is to sell. The NFP print might come to life. .com chart. Oh, is the .com chart put on the SPX? Okay. Well, it is super interesting. And if this is the .com, then you can say that the SPY will sell off. But I would say your sample size is really small. You only have one sample. So in my opinion, this is not something I would personally trade on or make trading decisions on. It is cool to look at it, but I would say the sample size is too small. And yeah, just I think the SPY goes up more. I think we got the dovish Fed. Just looking at the fundamentals, we got the dovish Fed, which is exactly what stocks need. And I think we can rally more to the upside. So I am still buying breakouts on individual stocks. I could be wrong. I could absolutely be wrong. And I can lose money. That's why the market exists. But that is my take. Anyway, thank you for sharing, Max. If you have anything to add to this, feel free to of course, put it in the comments. Sluggy, hello. I'm short CJ2. CJ. CAD yen. So CAD yen, well, pretty much any bet that you have on the yen can be done through many assets. You can do CAD yen for sure. I prefer Swiss yen because Swiss yen is cheaper to hold. So the swaps are, the negative swaps are much smaller. Depending on your broker, they may even be positive. That is why I personally prefer Swiss yen. But if you want to do a short term CAD yen short, that absolutely works. Swiss is weakest today, bullish on gold. Do you have a Telegram? There is the A1 Trading Telegram. So if you look at the comment section, you look at the description, you'll find the link. Or if you just Google it, A1 Trading Telegram, you will find it. I have a question. What Forex pairs do you suggest for starters, beginners? Anything that is moving. So if you limit yourself to just one currency pair, you will have months and months of trading where the market is just not moving. Trust me, I went through it. At one point in time, I was trading only 6 currency pairs. Sorry about that. And the trade frequency at some points was extremely low. I would say focus on anything that is moving at a specific point in time. Right now, that would be the yen. The yen is definitely moving at the moment, and I think it is going to continue to move in the upcoming few weeks. The dollar is always a good play. So if you want to focus on something or start with something, you should start with the dollar. So that would be my kind of best advice. The dollar is the main thing. Anything on this list or everything on the list is connected with the dollar. And whatever you're trading, you need to have a view of what the US dollar will do. Both oil tickers move together. They do. But if you want to get the most accurate print for the Middle East conflict, then Brent is the way to go. AP print was horrible, so NFP is expected to be bad too. Not necessarily. There is a small correlation, but it's not that big. Try searching on Kalshi. I can try that, yes. Jobless claims today. I think that was yesterday. Marco, did you resign your day job? I don't have a day job. My day job is basically this. So I live stream, I create content, and I do some marketing work. I have a community, education. So that's my day job, you can say. And then on top of that, of course, my main thing, my main interest, main hobby is trading. But it's all tied to trading. So my trading performance is directly correlated with my day job. Just a projection. I predict NFP to come in as expected, as could give our extended pairs in reverting more opportunities. Saying it's really interesting to see the price move was almost exactly the same. That is true. So it does closely follow the .com price, absolutely. But for me personally, I wouldn't do any trading decisions because of this chart. I may be wrong, and we may get a big dump. But with the dovish Fed, I think the dump could have happened with a hawkish Fed, a Fed that announced rate hikes in the future. With a dovish Fed, a Fed that doesn't really care about elevated inflation, I think stocks rally more. I think a lot of investors have gotten a green light, seeing that first, Citadel has bought a bunch of AI stocks, and second, that the Fed has turned dovish. If you look at the economic data, inflation, CPI, USD, inflation is elevated, no doubt about it. We're above 2%, 3.5%. That's pretty high. Strait of Hormuz is still closed. Inflation will most likely keep on going higher. So if you look at the IMF Port Watch, see? No transit calls, no transit trade volume. So inflation will most likely continue grinding higher, but the Fed will stay dovish, basically. By the way, if you do want to get the Edge Finder, you can do so by clicking the link in the description of the stream, or just search up Edge Finder, A1 Trading, and you can use the code Marco to get 25% off. Okay, so this is both for the Edge Finder and for the A1 Trading Discord. Now for the Discord, you can also join for free. Again, all of the links are in the description of the stream, but I will also post the link to join the free Discord in the chat. So you can find the link in the chat as well. Let's do that. So Swiss yen. Okay, Swiss yen. Okay, cool. So you're basically doing the same thing as me. You are basically in a short on Swiss yen, which again makes a lot of sense. Aussie NZD. Can you please tell me about today's gold market? What do you think about CAD Swiss, GP CAD, Swiss yen? Strictly cheap hold, anticipating intervention. Yeah, but not just an intervention. There's many different catalysts to be bullish on the yen. First, intervention. Second, hawkish Bank of Japan. Third, GPIF pension funds. Fourth, Scott Bessent. So now it's a joint effort between Japan and the United States to push the yen to the upside. So it's not just the Bank of Japan, it's also the Secretary of Treasury. That's a big thing. That's really, really important. That gives the yen a lot more power. So there's many different reasons to be long on the yen. What do you think about Euro yen? Euro yen down. Aussie NZD, gold. Okay, just give me 1 second. I'm gonna go grab a glass of water. I'll be back. You said on your channel previously that you had a day job. No, my day job is this, basically. I never had a day job except in college. Right out of college, I started trading, making content online, education, promotion, and that was basically what covered the bills. And then trading was on top of that. My best advice is, if you have a day job, don't quit your day job to trade. That's a recipe for failure. If you have a side business, that's good as well. Don't stop the side business. So you need to have something that's gonna create a steady monthly income to pay the bills. Okay, depending on the country you're in, I would say at least 1,000 euros, 1,500 euros per month. What you need to have every single month, no matter your trading performance, because you're gonna have losing months. You may even have a period of losing months, but the bills, they don't stop because you had a losing month. So that's my best advice for success. Well, the best advice would be to get a job at a prop firm like Positive Equity or SMB Capital, or at a bank that maybe does trading. Second best advice, if you want to do it on your own, is have a day job, expenses covered, and then join a community where you can learn to trade. Example being the A1 Trading Discord. Okay, so join the A1 Trading Discord. You can join for free, and you can also become a paid member if you want to get access to everything that's in the Discord, like the trade ideas, for example. Scott Bessent is doing almost the exact opposite with the yen compared to what he did with the UK pound in 1992. Okay, I don't know about that. That's something for me to research. Euro yen, side business is a must if you're trading. Yeah, you need to have something to cover the bills every month, no matter your trading performance. Like even the guys that are working at banks, at hedge funds, at prop firms like S&B Capital, they get a monthly salary. I know because I did an internship at Positive Equity, which is a prop firm, like a real one, not like FTMO. And those guys, they get a monthly salary, which covers their monthly expenses, and then on top of that, they get the profits from trading. And they have losing months. It happens. I want to cover gold because I know you want to see gold. So let's go through it. And it had a big explosion up. So I know Alan is in this trade, and it's a big runner. So congrats to Alan for catching this position. It looks really, really bullish. We got the breakout to the upside, which is something that I didn't really expect, although I'm happy to see it. So this is your trend line. This is the support level. This 4K, the support level I was talking about. And we finally broke out of the trend line. Okay, we finally broke out of it with a lot of momentum there. A substantial push to the upside. I think in percentage terms, 4.22%, that's a big move up. That's a big move higher. Okay, so then that begs the question, should you buy? Should you look for buy setups on gold? And I would say, no, not right here. Well, I'm not. So you can, I'm not looking for buy setups. First, you're stuck at a 200 EMA, which is going to act like a massive dynamic resistance. That's a problem. The price is clearly overextended. We had a really big rally to the upside, a really big rally with almost zero pullbacks. So I think a pullback is due. I think a pullback is due, and I would consider getting in on a pullback. So if this happens, let's say, to maybe 4,150 or 180, I would say that's a good level to try and get in. Stop loss, probably below 4,100. Yeah, that seems good. And take profit, well, trailing stop loss is the best with a positive skew asset. So with an asset that moves up over time, like gold does, the best way that I found to trade it is to use a trailing stop loss. I also think that the edge finder is printing a bullish print, gold, very bullish actually. So that's great. That's a big confluence right there. I just want to see a bit of a correction, a bit of a pullback, and then I think it would be a good time to get in. So fortunately, we did get a breakout. It's a big one. It's a lot of momentum behind the breakout, big blue candle. So buy setups are on the table, especially with a dovish Fed. So gold loves a dovish Fed. I was thinking of selling it. I was waiting for a breakdown of the 4K level because I was betting on a hawkish Fed. So I was betting on a Fed that may hike interest rates in the future. That didn't happen. They did a full 180. So they're basically going to stay dovish. That's why this looks so good. One thing that is concerning is that Bitcoin is not rallying in sympathy of stocks. So the S&P, massive run up, gold, big breakout higher. Crypto, nothing. Crypto is staying flat, staying boring, doing nothing in this area, just kind of going from an ascending into a descending channel. And that's classic range-bound price action right there. Now, I did see Aussie NZD as a request. Let's take a look at that. Let's run it through the edge finder. The neutral with a score of -3. Okay. So we're stuck at support here, I would say. Yeah, we are stuck at support. Edge finder is neutral, which is a problem. -3. I think you need at least -4 or -5 for this to print bearish. I don't know, what are you seeing on Aussie NZD? So if you can just put it in the comments, what exactly you're seeing with Aussie NZD. I know this was a trade idea that Alan had, betting on Aussie weakness and New Zealand dollar strength. But I would say the breakout that you would need, the breakdown, has not happened yet. I would say we're still stuck at support. Edge finder is still giving you a neutral print, so I'm not seeing a lot of opportunity when it comes to Aussie NZD. But if you have a different idea, well, do let me know in the comments. Maybe I'm missing something. My theory here is a carry trade rotation to Swiss instead of yen. Yes, that is a good idea. So it looks like the yen is losing the carry trade status, and the next runner-up, the best contender after the yen for the carry trade, for a trade with a very low interest rate, is going to be the Swiss. So essentially, a lot of strength should come into the yen, and the weakness should come into the Swiss franc. That's another bonus reason to be short Swiss yen. It's an anomaly. Swiss and yen is the only two currencies which moves a bit differently. Better borrowing rate with the Swiss. Issue is that it has been appreciating over time compared to the yen, but what was true before doesn't mean it can't change. That is true as well. So if you zoom out on Swiss yen, the problem with just selling the Swiss franc is that it has been going up and up and up. So it has been gaining a lot of strength. Okay. So your carry trade profits kind of erode as the price keeps going up. So you end up being break even or maybe even negative. But if this does turn, so if you do get a trend to the downside like this, well, then that creates a whole different scenario. That creates a positive income from the carry trade, and also positive income from the price depreciation, from the Swiss losing value. But you do need a big trend reversal. You do need for this chart to go lower. Bad months are a guarantee. Absolutely, yes. Thank you for the gold review. No worries. Gold TP targets. I don't have any take profit targets. So I don't have any targets on gold. I'm using a trailing stop loss. Okay, I'm using a trailing stop loss. So I'll let the market tell me when it's time to exit. Honestly, how much are you making? I'm making peanuts. Aussie Swiss, USD CAD at 1.4 break or bounce. I see oil bounce coming. Aussie NZD longs. Max is short Aussie NZD. I'm seeing a lot of interest around Aussie NZD. Marco, the only thing I'm seeing on Aussie NZD is 50% rejecting nicely on the H4. Okay, so we're talking about fibs there. I would need some sort of an extra catalyst, some sort of an extra reason to go short on Aussie NZD. I'm not seeing much. To be honest, my next trade is probably going to be on the dollar. So what I'm looking at the moment, I'm looking at what is a strong currency to pair the dollar with. Could it be the Aussie? Could it be the NZD? So buying AU, buying NU. Could it be buying USD CAD? I don't think so. I prefer Aussie USD or NZD USD. But that is my next thing on the to-do list. Finding a strong currency to trade the dollar against that, or to sell the US dollar. And that's about it for my segment. You have James coming on in 30 seconds. I want to remind you, if you want to get the Edge Finder, the link is in the description of the stream. And you can use the code MARCO to get 25% off. Okay? So do check out the Edge Finder. It's an amazing piece of software. Now I'll play a quick transition, and then you will have James. Thank you for watching. You can catch me again in 2 hours, and I wish you good luck. So yeah, that's it.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size, and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello. Happy Thursday, ladies and gentlemen. It's almost the weekend. Hope you're all well. Hope everyone's doing good. I see some familiar faces as always. Max, Sluggy, Tony, good to see you all. So, crazy moves in the market recently over the past couple of hours or so, over the past day and a bit. Gold is doing phenomenally well. So for anyone that has been trading with the Edge Finder, you should theoretically be in some fantastic positions on gold. When I say should, of course, I mean that very loosely. That doesn't mean it's follow the Edge Finder all the time without dispute. But what I mean by that is we have seen the score history on gold really deteriorating over pretty much the whole course of June. Since then, we've seen gold's score really start to improve over time. Now, something I always mention with the score history, the reason I like to use it is because it's not just a case of we can see what it did, last month, for example, but it's a good gauge of, in my opinion, how reliable is this reading. So the fact we peaked down here at like a -10, whatever this may have been, a really, really bearish score down here. And then we saw this slow deterioration or slow pick back up in the score and then flip. And then again, another slow pick back up. This looks like a more long-term reliable move in the score, not just a case of, we've gone from very bearish and now it flips suddenly back to being bullish, because that very likely is just one data print or a handful of data prints. Whereas this has been, again, more of a reliable move to the upside. So this is really, really good. So the Edge Finder has caught this perfectly. So shout out to the A1 team that developed the Edge Finder. Code delete if you don't have it, by the way. I think that gives you like a 20% discount. I'm not really sure, to be honest, but it does give you a discount. Helps me, helps you. Anyway, so yes, gold has been on a fantastic run to the upside. So if you, again, have been following the Edge Finder and you are in long, very nice, well done. I think now it's pretty much the time to start looking for some long positions. So we can have a look at that in a second. 2288, good to see you, my friend. Hope you're well. Christoph, good to see you here, as always. Aussie New Zealand longs on the H1. We can have a look at the Aussie New Zealand, sure. Your long gold from 4070, very nice. I'm also in some gold long positions. I was long around 4,000, so roughly around this level here. And then I also have another entry around here. They're both tiny, tiny positions, though, 0.01s, because I was looking more for a DCA ladder approach. Some of you will remember I was looking for gold to actually go down towards 3,500 at one point. So I structured a layered DCA approach around that idea with, staggered positions all the way down here, pending. Now, of course, that's not happened. So now I'm stuck with two pretty measly positions, but there is money there, so it's okay. I suppose it's not the end of the world. It's like suffering from success, if you will. Jeremy, good to see you, my dude. Aussie New Zealand did react nicely. Yeah, so we can have a look. We'll do gold very quickly, and then we'll have a look at Aussie New Zealand, because I've got some points I want to raise on that one. So gold, what we were talking about yesterday is that we were sort of hanging around this 200 moving average. I think we were hovering around these highs. This is kind of where my segment was yesterday. So my point that I was mentioning was that for me to get interested, I'd have to see these highs get cleared out, and I'd have to see a new high get printed, which is what we've seen so far. Now, from this point, it's pretty much perfect. So as we've already looked at, we do have gold with a very bullish reading here with a score of 8 on the edge finder. We've got a really good score history that makes me very confident. Every single thing here, except crowd sentiment, is bullish. So, you know, the stars have aligned. It's looking great. So now all I need to do is draw the fib from the low to the high. And I'm actually going to get rid of this 38.2. I don't need that there. So what we can see, if we get rid of these boxes and just clear this up a little bit, if we draw a box in between the fib zone, we can see that this lines up with the previous structure on the left, which is really good. So this wouldn't just be a fib pullback. It would also be a, you know, the break and retest of this level. It would allow time for these moving averages to cross over. And this would be an amazing point to be a buyer, in my opinion. Again, everything is lined up, and we could be, you know, in a perfect world, we could be in for a really good position if gold does continue to run bullish. And that is very contingent on, obviously, headlines and the US data. So we do have tomorrow NFP unemployment. We've got a lot of data coming out tomorrow that is very impactful for the US dollar. So that is obviously something to keep in mind. The other thing we need to keep in mind is, again, the headlines with the Middle East, because it's not uncommon that we could get a re-escalation over the weekend. So this isn't a case of gold is bullish on the edge finder, we're waiting for a pullback, it's full steam ahead, we buy gold. There is still a lot of risk in this position. So with that said, if those things don't happen, we could be in for, you know, basically buying the bottom of gold. Now, that's a bold statement. So, you know, I don't mean that is factual, but theoretically, again, if everything continues to go well, we get weak US data, we don't get re-escalations, there is no reason that this couldn't just be the bottom of gold around 4,000, because again, it's a weekly, daily level of support. It's a really nice round number, and this has been holding up for quite some time. So the other thing I do want to mention with gold before we move on to another market is the daily time frame is providing a little bit of a concern for me at the moment. Because although we do have the idea that, yes, you know, we could get weaker US data, we could get continued de-escalations, the technicals aren't quite all sunshine and rainbows. Because again, theoretically, we could go into the weekend, we could get Trump tweet something, de-escalation ends, and actually we go back into next week with, you know, all guns blazing again. Now, on the technical side, what we have here on the daily is a previous level of, you know, resistance over here, then turn support. So this could actually just be another retest of this level. And you will notice here, we're also testing the 200 moving average. So there is absolutely a possibility that we reject this level and come back into this range and potentially even break lower. Now, I'm not saying that's what I expect. Like I said, I do lean more towards the long side. That's where the fundamentals are telling me to go. And that's where the current headlines are telling me to go as well. But again, as a trader, we've got to think about the risks on both sides of the trade, whether you're buying or selling. You've always got to think of the counter of the idea to then be prepared. Now, there's not really anything else for me to talk about here. I know we did actually have a trend line here at some point. It seems to have been broken down. It's not a huge deal, I don't think, at the moment. So we'll ignore that. But yeah, to summarize, I think gold is a good buy, but there are definitely risks behind the idea. Right, that was a lot of words very quickly. So Aussie New Zealand, yes, this has been a hot topic recently. Now, I'm in a difficult position because I did really, really like this trade. You know, it was almost perfect. So I'm going to break it down from sort of step one, because I think we kind of skipped over it yesterday. So I'll do it all again today. So Aussie New Zealand, you know, some of you will remember I was short around here, around 1.22. You know, I had that position for about 1 to 2 weeks. It didn't do anything. It went into a pretty decent profit, then pulled all the way back to entry, and it was just range bound. So I closed that trade for break even. Actually, a small loss, actually, due to the spreads, which again is why I closed it during a range period, just so I wasn't losing money while nothing was happening. I didn't see the point in holding that trade. So we've used this weekly level here as the resistance, which is, you know, great. We've broken out of this range that's been established since sort of 2013, 2014. As I always say, it's a bit discretional depending on where you draw it and where you start the range. But either way, a very long-term range, like 12, 13 years long. Beyond that, the only time we've been able to break above this range have been these 2 attempts here. And each time we've seen massive selling back into the range, and same thing on the lows here. So again, perfect sort of range trader, range trader's wet dream. It really was just a case of selling the highs, buying the lows, and that was it. So really you had to do. Now, of course, we broke out on the hawkish RBA. And the reason I'm explaining sort of the history of it is to give you context about what the current situation is. Okay. I don't think we can just sit here and say Aussie New Zealand's bullish or bearish because of this. We need, especially on a trade that is or has this much maybe potential. So we did manage to break out this year, and this was on the back of at the time we had quite a weak New Zealand dollar. I don't think they were, if I remember correctly, I think they were actually quite dovish. I might be wrong on that. If I might be getting my history mixed up, but I'm fairly sure the RBNZ was quite dovish at this point, while the RBA, so the Central Bank of Australia, was hiking rates. They hiked 3 times. Now, at the moment, the dynamic we've got is actually a little bit of a reverse situation of what we had over here. We've got the RBA on pause, not dovish, but on pause. And we've got the RBNZ that is looking like they're actually going to be attempting a hike. So we've got a little bit of a central bank stance flip here. So that's one factor. And to be honest, that's kind of the only factor for a short trade I can really justify right now. So the weekly time frame is still in this really bullish trend here. We've had a really strong run to the upside and a bit of consolidation. So this could, it could be an indication that we are losing upside momentum and we're ready to continue lower. Or it could be, sort of an accumulation period where we're actually getting ready to run higher. I don't really know just yet, to be honest with you. So yeah, we've got the central bank aspect, which again is a pretty nice bearish catalyst. But again, weekly trend is bullish. We've got the daily trend that is bullish, and this 200 moving average kind of held over here. And we are still sort of respecting the support level as well. So the daily maybe has some bearish potential if we can end up breaking below the 200, having a retest and continuation lower. But the daily definitely doesn't look fantastic. But the H4 is kind of where I really got excited. So again, on the weekly time frame, we could have been looking for that sort of mean reversion trade back into either the high of the range or even the middle of the range, which would have been a fantastic R&R trade. I think we were looking at around a 1 to 10 if it played out perfectly. Now, the H4, as we were just about to talk about here, moving averages flipped bearish. We had a brilliant change of trend here. So, we were creating these lower highs, the moving averages that were there. This previous pullback that we saw was a 50% retracement as well, or a fib retracement, I should say here. So, fib from this high to this low, we saw a perfect retracement back into the fib zone. So we've got the trend, we've got the lower highs, we've got the market behavior. It was great. Now we had the same thing here with the fib from the high to the low, pull back into the 50% retracement. And this is where I was looking to go short a few days ago. The reason I've not done that is because I think the market isn't actually ready. I think the technicals were there, the technicals are there. The fundamentals were temporarily there, but not really at the moment. So if we go to the edge finder and we look here, Aussie New Zealand was getting a really nice bearish reading over here, and that's where I was looking to go short. But since that time, the fundamentals have flipped a little bit, and we've gone back to being neutral from being bearish. So we're now sat at -3. Now, if we look at the 3 pillars, which is what I call them the 3 pillars, because it's the 3 main fundamental categories or macro categories. We've got the economic growth, we've got the labor market and inflation. 2 of the 3 are actually bullish. So out of these, I'm actually being told to be a buyer, not a seller. I don't really care about these ones unless the 3 pillars align in some way. So, if these were all bullish and we had bullish institutional activity, fantastic. But because these are slightly mixed, actually slightly more sort of leaning bullish, institutional positioning is neutral. And here actually says bearish. So maybe this is a visual bug. I'm not 100% sure. But either way, that doesn't really tell me anything. Sentiment in terms of retail doesn't have anything, and the technical signal, I don't really use that because I find my own technical trend. So this is really conflicting with that short idea. So I really don't want to be in a short position, although again the technicals look great for my entries. As a fundamental and macro trader, I just can't justify the idea. So the only thing that would warrant me getting in this trade is either a bit more hawkish forward guidance from the RBNZ, more dovish forward guidance from the RBA, some sort of fundamental flipping growth or the labor market to flip these bearish. That would be perfect. But again, as things stand right now, it just seems like a technical trap, if you will. So technically, as I said, looks absolutely perfect. I don't really think it could get much better. But yeah, the fundamentals are just too weak at the moment, unfortunately. So Yeah, I know. Again, that was a long breakdown, I know, but yeah, my segments are an hour, so I like to try and use that time to explain things in a bit more of a deeper level rather than just saying, "Oh, I'm bullish or bearish." So let's move on. Jeremy, I'm not sure if I already said hello to you, but if I didn't, hello. Hope you're well. Will gold go bullish today? I think, to be honest with you, when it comes to gold, we have kind of missed the bullish idea. If you're not already in it, that is. So obviously, you know, in hindsight, you would have want to be a buyer of gold down here during the range. Again, easier said than done, I know. But what you don't want to do now is buy gold here thinking that this is just going to continue to run higher. It could. I'm not saying it won't, but what we need to account for is the daily time frame that we just looked at here. So although we have, oh, hold on, let me, there we go. So although we have broken these highs over here, we've now come into this daily level of resistance, and we're currently testing the daily 200 moving average. So what we need to be careful of, again, I've already covered this, so I'm not going to go into it too much again, but what we need to be careful of is not just this technical potential short setup here, but also the US data on Friday, but also the headlines that might come out this weekend. So if we take a look at oil, something I've been talking about, and again, I've said this before, but to clarify, I don't have proof of this. This is just my idea. You know, it's just something I've noticed that kind of does make sense given Trump's temperament. When when oil gets to, you know, a high price relative to where oil previously was, and it starts to become a bit of an inflation concern, like in these highs when we get these escalations or had these escalations, we get de-escalation talks or headlines or tweets or Trump posts. We get something coming out to push oil lower. But because oil continued sort of range bound high, you know, pushing highs and then pushing lows, we then got this larger move to the downside with cooler inflation prints. Or a cooler inflation print, sorry. And then we got another escalation. And then, you know, again, when oil started to run higher, a little bit heating up, we got another de-escalation. So what this looks like is Trump doesn't want high inflation because, you know, his whole narrative has been, we want lower rates, or he wants lower rates. You know, he wants incredibly low rates relative to where they currently are. So if he's affecting the oil market and pushing oil prices higher, that in turn pushes energy prices higher. That in turn pushes inflation higher. And that means the central banks can't justify cutting rates. So he doesn't want oil to continue to run higher because that's just a net negative for him, not just in terms of inflation, but also higher rates. That doesn't look good for Trump. So it could be a case if we've had these de-escalation talks to just bring oil prices a little bit lower, and then over the weekend is actually, no, you know what, scrap it. And then, you know, next week again, we get another de-escalation. So I don't know if we're out of the woods yet regarding this whole Strait of Hormuz situation. We could be, you know, again, I'm talking just on what I've seen, what I think. It doesn't mean it's solidified and guaranteed. So this could be the end of it. You know, we could be at the end of the road with this whole Iran situation. I don't know if we are, and I would be very hesitant to say so. But yeah, I'm very cautious regarding the whole gold higher and de-escalation thing at the moment. Okay, right. Is the current little pullback on Aussie US dollar enough to maybe enter soon long? You know what, Christoph? I really like having you in these streams, my friend. You ask good questions, and your ideas are always very in line with what I like to look at. So, yes, actually, I would argue that it is. I personally wouldn't take this just because it doesn't really line up. It's slightly missed my sort of entry criteria here. But what we've got, to keep it simple, we've got the moving averages at the bullish. So we've got the bullish trend. That's fantastic. Excuse me. What we have, if we do add the 38.2, which again isn't, I don't use the 38.2 really. It's more of just a, you know, does it line up with that level or does it not? It's not, you know, my core strategy is the 50% to 61.8%. The problem is when you start adding all of these different fib levels, I think there's what, like 5 or 6 different fib levels. If you use the default one, it removes a lot of the systematic approach because then you're just waiting for whichever level. Whereas the ones I use, the 50% to 60%, is very simple. If it doesn't get into this zone, there's no trade. But anyway, I digress. So if we do use this 38.2, we can see there's a little bit of this sort of previous high here. We've got the break, we've got the retest, we've got the 38.2 pullback. So this could be a pretty good technical entry to go long. Excuse me. So something like this. Now, the downside of doing this as well is the stop loss would need, in my case, again, need to be at kind of this low here within, this area. And that would not just allow room for this low to get hit again, if that does happen, sort of double bottom potentially, but also allow room for this 200 moving average to act as a dynamic support if needed. So the stop loss in this case is a little bit too large, I think, for me. The entry isn't great. I would rather see it come back a little bit lower towards the 61.8, and that would line up with these previous highs. So yeah, that's my ideal situation. So let me just remove this. There we go. So something a bit more like this would suit my strategy a bit more. Now, when it comes to the data, it is supportive. So we've got a really nice score, +5 for Aussie US dollar. Economic growth is bullish. The jobs market's bullish. Retail sentiment is actually retail is selling this market. So we are getting the bullish reading. Institutional activity is bearish. But the thing is, with the recent institutional position, recent COT reports, it has been a little bit misleading because obviously COT data lags by a week. And excuse me, due to the fluctuation in headlines and developments in the Middle East, what they did last week doesn't really tell us anything about what they're doing this week, because obviously we've had a change of headlines. We've had new data or new information that is driving markets. So to be perfectly honest with you, in this case, I would largely disregard the COT positioning, again, because it doesn't reflect what they're doing right now, given the new information we've got in the markets. So yes, I think overall being a buyer of Aussie US dollar is a good good idea. But yeah, as I said, I think I'd just rather see it have a little bit of a deeper retracement before I got overly interested. So I will set an alert, because I've got a bad habit of looking at trades on the stream and just completely forgetting about it afterwards and missing trades. So I'm going to set an alert here, which is at 0.72. And that would, again, line up with the sort of 50% retracement of the 50% retracement. And that would line up with these previous highs. So that would be my entry level if that does get hit. Okay, what do we have next? Did I miss the Nikkei short entry? Christoph, my friend, you did miss it, but in a good way. So, sorry, there's ruckus outside. So yeah, what was I doing? Yeah, so the Nikkei position was actually really good at the time. Do we still have that bearish reading for the Nikkei? I'm not sure. Let me just double check. No, we don't. So that the trade's gone. But what Christoph is referring to here with the Nikkei idea was Nick and I think a lot of other people in the stream as well, were, whether they want to admit it or not, that we were short on the Nikkei here, because you can see we had a really bearish score on the Nikkei for a couple of days, which was really good. And at the time, we obviously had this sort of risk-off sentiment. Oil was continuing to move higher, so it looked pretty good on paper. So the entry we took on the Nikkei was, hold on, let me just try and get this correct, because again, I can't remember the exact entry. I think it was like this. So yeah, what we had was this level in the fib. Sorry, I'm just trying to redraw it all so I can visualize it for you here. So this was what we took. So we had the previous levels here on the Nikkei, previous supports. We ended up breaking lower, coming back in for what looked like a break and retest into the fib level, and we had this bearish trend on the H4. So I was short here with a stop loss. I think it was around here, give or take, and I got stopped out of this trade. So yeah, Christoph, I would say you have missed it, but be glad you've missed it. So I think the default direction on a lot of these markets, the Nikkei, the DAX, the Dow, so on and so on, is actually to the long side. So although, excuse me, although the H4 is still bearish here, we've seen a little bit of a rejection of this 200 moving average on the H4. The daily time frame is still very bullish here. So we do remain in this bullish trend. And another little risk factor that I was pointing out in this trade before we actually took it was sort of the behavior that we see with the Nikkei. So when we get the sort of deviation between this 200 moving average, we end up moving considerably far away, like we did in these previous two times here. We do see these larger pullbacks on the daily, where the daily remains bullish, but the H4 changes to bearish. But we don't really do anything here. It's just a larger pullback. So I think this is really what we've just seen, which is just a larger pullback, not necessarily an actual bear case for the Nikkei. So I'll be honest, I think staying away from it or looking to be a buyer is probably the easiest way. However, we are still getting a -3 score, which is obviously leaning more bearish, but it is neutral. So I would, yeah, wait for something to happen. Either, we break above this 50 moving average and we really start to define a new bullish trend, or the edge finder flips bullish, something like that. Maybe then I could actually get interested into taking a position. But yeah, for now, nothing here for me. Okay. That's the whole video you did there, James. Yeah, I feel like I'm talking a lot more than I normally would on these streams about the markets. Normally we sit here, we have a ramble about some topic, and then we go to the charts, then we go over another topic or whatever, and then back to the charts. But it's been, yeah, quite a full-on segment, which is good. I'm feeling quite wired up today. Gold is always bearish. That's a very interesting take. Explain to me how gold is always bearish. I'll be honest, that sounds like you started trading in this period. But yeah, I mean, gold definitely isn't always bearish. I think the recent developments, the recent environment for gold, yes, has been very detrimental. We've had like, what is it, a 30% drawdown, give or take, from peak to low. But yeah, I mean, you can't disregard this that we've had. So last thing I'll say before we do move on, one of the things I've been talking about on gold, which is one of the reasons I was buying it at around 4,000, was because I think what a lot of people were disregarding on gold was that, yes, we had a bad landscape. We had higher inflation expectations, higher yields, blah, blah, blah. So yes, the environment wasn't great fundamentally or geopolitically. But when you zoom out to a weekly, this was a fantastic multi-year run to the upside. And I think what a lot of people got used to were these micro pullbacks on, an H4 or a daily time frame, and they expected that to continue. That's what we got used to and considered pullbacks. But realistically speaking, a market cannot, again, generally speaking, a market cannot have a multi-year rally like this and not see a larger pullback like this. So if we look, the weekly is completely intact. This is still a very bullish trend. And this, if this was just an H4 time frame, forget this is a weekly, would you still be calling this so scary and so bad and so bearish? I don't think so. I would still consider this just a normal pullback. So I think that's, again, something that a lot of people have kind of disregarded. They've completely forgotten to zoom out timeframes, and they've focused on the H1, the H4, and the daily, where it really does look bad. But again, the weekly actually looks pretty healthy, I think, anyway. Gold is always bearish. We just addressed that. US dollar CAD weekly did flip, did it? I know. Yeah, you told me about your US dollar CAD idea last. Was it yesterday? Ah, very nice. Yeah, you've got what you were looking for, haven't you? So again, as I said to you yesterday, I don't really have a bias, to be honest. Fundamentally speaking, I am quite neutral here, just because I do lean more bearish on the dollar. So if we look at the economic heat maps here, the US is very clearly struggling. It's a 30% score, which is very low. The recent prints haven't been great. We had manufacturing PMIs here that did quite well on the previous release, but largely what we're paying attention to here is the labor market that we're going to get some data for tomorrow, and also inflation prints here. So fundamentally, the dollar doesn't look great. So yes, your short idea does make sense. But I just find it quite difficult to actually get short on the dollar at this moment. I'm quite cautious. So I'm watching really to see how does dollar CAD react on this daily time frame. Are we going to get, we've got the break here. Are we going to get this retest into this daily 200 moving average and then a continuation higher and follow this sort of very typical bullish trend that we've got, or bullish setup? And now if we line up the fib, it's not perfect, but we do have a 50% retracement sort of within at the bottom end of this potential retest area. So there are a few things with dollar CAD that just have a few red flags for me. But again, it doesn't mean it couldn't work out. If I was in a short position, I would have a trading view alert here or some sort of alert here, and I would maybe trail stops or do something just to make sure if we do get this retest and continuation, that at least I'm protected. Because what could also happen, don't let me scare you, this could also happen where we actually just completely break it, have a retest of this level, and then continue lower, and basically just reestablish this sideways range. So that's my 2 cents. But again, I don't really have a trade idea on dollar CAD right now. What entry positions are you looking for on gold? None, actually. I'm already in gold. So unfortunately, as you know what? Hold on, just bear with me for a second. I'm going to write myself a note to do this tomorrow for tomorrow's stream. Re-add gold entry levels. So I had them on, and for some reason they've disappeared. I must have deleted them when I was doing some of my weekly analysis. But either way, I've been buying gold here within this range. So I've got an entry around 4,000. I've got another entry around 4,050. Not exactly, but within those two levels. So I was buying this range, but it wasn't a case of I'm super smart, I think gold's going higher next week or tomorrow. It wasn't that simple. So what I was doing on gold was actually I had these orders I just told you about, but then I also had orders every $100 down from 4,000. So I've got an order at 3,900, 3,800, 3,700, all the way down to 3,450. And that was because I actually wasn't smart. I didn't get this right because I actually expected gold to continue lower to around 3,500, which is where I expected these orders to start getting filled. So that's my position on gold. So when it comes to getting a new entry, obviously the ones I just told you about, are long-term, more of a DCA investment approach, not a short-term speculative, I think gold's going higher next week type of idea. But again, with the development in headlines, the fact the dollar's weaker, the fact Edgefinder's bullish, and we might be getting this little bit of a change of trend on the H4, I want to see this pullback to the 50% retracement, retest these previous highs on gold, and then I will get in on this retest and look for this continuation. So I know, again, that was a very long explanation, but yeah, that was to summarize my positioning on gold. What's your thoughts on bond yields? Could NFP data threaten the upwards trajectory? Upwards trajectory. Now we are seeing oil prices drop. Hold on. I've got. Where are they? Tell you what. Let me just re-add them so I can visualize it properly. Let me get rid of this. So we need the DXY. Let me get rid of these as well. Just bear with me for a second. So we need the US 2-year. There we go. And we'll add, should we add the 10-year? We'll add the 10-year as well here. So what we're seeing with the yields, we're seeing them overall to the upside. So typically what we see is the federal funds rate follow the 2-year and 10-year yields. You know, when the yields are rising, we often see federal funds rates increasing after that as well. So what we are seeing right now, again, is these yields moving to the upside. So we are still expecting, or the markets are expecting, some type of rate hike at some point. You know, it doesn't have to be in the next meeting. At some point, we are, again, based on this dynamic we see, expecting rate hikes at some point. So there is this idea to keep in mind. Now, obviously, if oil prices are coming down, inflation expectations are coming down, that is going to weigh on the 2- and 10-year yields. Now, if we get weaker labor data, that could also weigh on the yield. So we might actually see the markets repricing a little bit and slow down on their expectations of rate hikes by the Fed. So to answer your question, do I think NFP data could threaten the upwards trajectory? Yes, it definitely could. But of course, it depends what NFP comes out as. If we get really strong labor data and we see a pickup in inflation expectations, for example, if the strait remains closed, we could see yields continue higher and actually rate hike expectations increasing potentially. But those rate hike expectations have actually been decreasing as of late. By the way, I hope you guys appreciate the cup. For any cat lovers out there, we've got a cat cup today. Okay. James, you did say hello. Are we still holding Eurodollar shorts? Yes, I'm still short Eurodollar. So here, it's okay. And as I said yesterday, the reason that I'm still holding, although I'm not overly optimistic, I'm not as optimistic as I was on the initial entry. The reason I'm still holding this trade is because the trade is valid. You know, nothing's actually changed really on the technical side. So we've still got the fib zone that is holding up, although we are pushing this 61.8 level, but we're not breaking and closing above. We're also seeing rejections off the 200 daily moving average, again, not breaking and holding above. So we are seeing a little bit of a selling pressure come in, granted, not by much, but it is there. So really, I'm just waiting now, can Eurodollar continue lower? And another key point, if it does continue lower, are we just going to correct the sort of impulsive, aggressive moves that we saw earlier in the week? Excuse me. So we might not get a huge rundown in Eurodollar like I actually expected initially. We might just see something a bit like this where we come and correct and actually just run higher from there. I really have to just see. But yeah, overall, I do like the idea on euro dollar. I've spoken about it a lot recently. It's not really a short-term fundamental play. I'm short euro dollar basically on a historical point. So again, I'll try and keep this short and sweet because I've covered this topic a lot. But basically, following the previous patterns we see within eurodollar on the weekly and monthly time frame, where we continue to make these lower highs, every time we do, we end up coming down towards parity. So I'm looking basically for the same thing to happen here. And seasonally, or on the 5, 10, and 15-year period, the seasonality suggests that we have. In fact, actually, I'll pull it up. I don't know why I'm trying to explain it. But I can actually just show you. We do have euro dollar that is historically bearish. I think it's end of August to November, if I remember correctly. If it's going to load. Hold on, I might need to refresh. I know I'm really behind on the chat. I'm yapping a lot today, so I'll try and catch up on it in a second. Just in a really deep market focus today, which is quite nice. For some reason, this isn't loading, but yeah, you'll have to just take my word for it. I think around the end of August to the start of November, eurodollar is historically very bearish. The dates might be a little bit off, but again, I can't actually show you it. So, but yeah, the end of the year towards. Love the breakdowns, James. Interestingly enough, I entered shorts Aussie New Zealand at the 50% fib where you were looking at, and I also have some small risk oil longs, as I am thinking we might have something similar over the weekend. Okay, KDX sounds like, yeah, we're on a very similar page then. Although, excuse me. Although, as I said, Aussie New Zealand has kind of fallen off my radar. To be honest, I have some ideas regarding possible VIX event in August. May I hear your thought on that? VIX event in August. I'd need a bit more information on that on KDX. I'm not sure really what you mean by a VIX event. Do you mean just trying to go long or short, or is there something specific? Hey man, Jadon Sancho. I'm gonna have to do this again. I've forgotten who that guy is. Hold on. So you keep calling me that, and is it a football player? Who is this guy? Oh, Aston Villa. So he's a football player. And as I said last time, I think this guy's relatively handsome. I don't swing that way, but I'll take it as a compliment. I think. He's probably in a lot better. Well, he's definitely in a better shape than I am. So it's a plus. I feel like I know you watching this from India. Oh, that's good. I'm glad to hear that. Yeah, I don't want to. Go on. Sorry. Pause. Let me think about what I'm trying to say. I don't want to come on these streams and just yap about what I'm doing. The goal really is to interact with you as much as possible. So then, you get what you're here for, which is your markets, and we can talk about your ideas, and also I can add my input as well. It's hopefully more like a friend dynamic rather than an idea of you coming here to just listen to me yap about various things, which I suppose is actually what happens. But anyway, King of Kings, good morning. TraderNick says, heck yes, Nick. I know you're a cat man as well. Modi, hello to you as well, my friend. Is expensive trade options? What is your general idea on those? We'll expect seasonality indicator on our side. Okay, cool. Look at how responsive they are. This is why, if you don't have the edge finder, you need to get it, man. I mean, the support is incredible. Look at that. As soon as it's on screen, Nick's in there. He's going to fix it. Fantastic user support. Love it. Bear in mind, code elite for the discount on the edge finder, please. So what's the general idea on options? I'll be honest, 9HI13 options are, to me, a completely different world. So I know, you've got people like Nick and Chris Pulver. I think actually, maybe Marco as well. I'm not sure if Marco does. I think I've heard him talk about options as well. But you've got all sorts of different things with options I just do not understand. So I don't feel qualified to really go into detail with it. But as for expensive, I think they are quite expensive. You can get very cheap ones. So the way and again, this is super basic breakdown from what I understand. I could be totally wrong. And I'm sure there's a lot more information about it. But from what I've understood, the cheaper an option costs to actually take or to buy, or whatever the terminology is, the much more likely outcome is that it's not going to work. So I think there's something called like a naked option, which I think is very cheap, but then the downside is basically unlimited. But then you've got like the ones that are a bit more expensive. Oh, sorry, wrong arrow. Ones that are a bit more expensive, but I think the outcome or the likelihood of it working out is a lot higher. So again, there isn't a simple answer of are options expensive, But I think, again, generally speaking, yes, you should have, I would say maybe 10 to 20, 30,000 to even try options. Again, that's just from my experience. I did try to learn them, but I'll be honest, I just don't have time to sit and study a new instrument or asset type or anything like that. Bias on gold. So we have discussed gold a lot already in this stream, so I'm not going to do it too much again. I've lost my analysis. Hold on. So with gold, I am bullish for now. But as I've been talking about, I think the main thing with gold is, first of all, we've got US data on Friday that could dramatically change Fed pricing in terms of hikes or holds, which can obviously then sway the dollar. So that's a big thing. But then we've also got the pattern of headlines coming in over the weekend. So obviously it's Thursday now. So for example, if you take a trade later today or Friday, you're exposed to the news, but you're also exposed over the weekend to say, we could get re-escalations. We could even get further de-escalations, which would of course be good. But again, it's kind of a 50-50 coin flip as far as I'm concerned with that type of thing. So yeah, to answer your question, I am bullish, but very, very cautiously bullish. I wouldn't sit here and say I think gold's a clean sweep to the upside. I think as things stand, if we go to the Edge Finder again, we have a look at gold. If we were in normal market conditions, without the Strait of Hormuz situation, without Trump's temperament of headlines over the weekend, this will be perfect. Gold, very bullish. The H4 is looking like it's about to flip bullish. We have a really, really nice previous level of structure that lines up with the fib. Again, it looks perfect, but it's just that context or the nuance that we have to think about here. Mine's not loading either. Yeah, okay. So it might just be a little bit of an Edge Finder bug, but I'm sure the team will get that fixed ASAP. They're very, very on it with the Edge Finder, which is amazing. That you get developers and things that will make something, they'll just sit back and it will collect dust while users try to use it. But again, Edge Finder people, team, fantastic people. And the best thing is you've actually got real traders that make it as well. So it's a case of, this is a really big side note, but everything that the Edge Finder has is actually relevant. It's not a case of, you've got all this stuff that is just like clutter. It is good stuff that is all relevant to different types of traders. Anyway, we're going to move on because otherwise it's going to sound like I'm choking on it. Sorry, that wasn't PG-13. Don't want to take too much of your time, but look at the VIX seasonality on the Edge Finder. Okay. I think there might be a bug with the seasonality. Again, Nick is looking at it, I'm sure, but I'm not sure if it will load. Okay, it is. Don't want to take too much of your time. VIX seasonality on the Edge Finder monthly is just one of the examples. Okay, I see what you're saying. So you're looking really at just a continuation or actually, you know what? It's very interesting. I wouldn't have seen this actually because I don't look at the VIX seasonality, but this does look pretty much one-to-one. So if you look here, historically on a 10-year average, the VIX moves up. The red line is what the VIX has actually done this year. And again, it has moved up. Then we have this period from, when is this? Sort of April to July, August, give or take, where the VIX kind of flattens out and moves to the downside. That has also happened. So yeah, I think maybe the idea of actually being a buyer of the VIX could be quite good. But the issue is when you're trading seasonality, let's say we were buying it here, because it's based on historical things, there is no account at all for what is currently going on in the markets. So yes, it could work, but I think in my case, if I was going to take something based on seasonality, there needs to be something else there. There needs to be, fundamentals or central banks or something. But with the VIX, I mean, I suppose you've got the Middle Eastern situation, which could definitely affect the VIX. So that could be something that you could pay attention to there. Looking at Swiss yen shorts, just waiting to see what the BOJ does. Yeah, my friend, the BOJ is definitely an interesting one. Modi, and this is a bit of self-promo, but I put out a video on my channel 2 days ago about the BOJ. So go and check it out if you've not already, because it explains sort of it doesn't go into a lot of detail, but it's more of a general understanding or explainer of what the BOJ is trying to do and what they have to do and the context behind it. Because I'm not saying you don't know this, you might do, I'm not sure. But again, the sort of narrative we've had within retail is a lot of either people that don't understand really what's going on. They'll see an intervention, say it's an intervention, that's about it. So they're missing a lot of the details. Or we've got people that are just saying, why don't the Bank of Japan hike rates? I'm not going to go over it because, again, I've already made a video on it and we've discussed it earlier in the week as well. But the general idea is that nothing is going to change, or at least I can't say nothing's going to change. That's too certain. But at the moment, nothing has changed. So, we've got interventions down here, interventions down here. Every time we catch this 200 daily moving average and we reject, we have, double bottom type patterns. Over here, we double bottomed. Over here, we created lots of wicks to the downside, retesting previous lows. So that maybe there is an idea that we actually come back down to this wick and continue higher from there. I don't really know. But the general idea or theory here is that because the MOF intervened, and obviously the Fed actually intervened as well last week, there's no policy change. So the whole reason that dollar yen runs to the upside like it does is because of the carry trade dynamic. And the carry trade is basically made up of the interest rate differential between Japan and the US, or any other country as well, like the UK, Europe, and so on and so on. So unless the Bank of Japan hike their interest rates, and the big or here is if the Fed or another central bank starts cutting interest rates quite aggressively, which again doesn't seem likely at the moment. Actually, we're expecting more of the rate hiking type of activity at the minute. This market cannot continue lower. Yes, they can intervene. They could continue to intervene. But again, there's no policy change. So these yen pairs will continue to move to the upside, I would expect. So when it comes to the yen assets or the yen pairs, my bias is automatically just keep buying them at these lower prices. Developers on it now seems exclusive to Eurodollar. How peculiar. But look at the speed of that. So yeah, Modi, sorry, that was a big explanation to your point, but hopefully you got something from that. I think it would be a cool addition to the EF to add correlation between different assets. That could be. Maybe, yeah. I mean, how could you do that? So I guess you could have a static version that would be super simple. You could have like a bubble here for, let's say the Canadian dollar. Oh, that's whatever, Canadian dollar, you get that with like an arrow for like oil, and then you could, something like that maybe. But yeah, anyway, that's not my job. James, do you have? Have you ever traded prop firm alongside? Yes, I've traded props now and again. It's not something I focus on. I think props are great for specific reasons. You've got two types of prop traders. I'm actually running out of time here, so I need to speed up. You've got two types of prop traders, really. You've got the ones that go full margin, trying to pass it and maximize the payout. They'll go for like 1 or 2 payouts max, and they'll try and get the most possible. That is, of course, really risky because your limits can get hit very quickly. But then you've got the other side that obviously take it a lot more seriously and try and turn it into more of a consistent revenue source. I like to actually take the former one, which is former. I don't think former is the right word. I like to take the more gamble approach, to be honest, with prop firms and maximize the payout. I just like to do that because I suppose. Actually, thinking about it, I suppose the reason I like to do that is because obviously day-to-day trading, I take it really seriously. Exposure levels, budgets, accounting for kind of everything that I have to do. So when I get a prop account, I kind of like to just let loose a little bit and have a little bit of a gamble. Maybe that's not the right thing. It's probably not, but I'm human. I like to have a little bit of fun now and again. So yes, when if I'm feeling a bit bored or I feel a little bit gamble itchy, I might buy a prop account and have a little gamble and see how it goes. But yeah, it's not something I take really seriously at all. So, I've got my certificates up. I've got some certificates up there. I've got Maven, Top Step, and another one. I can't see the name of that one. I can't remember it. But anyway, moving forwards, Aussie Swiss. Aussie Swiss, interesting one. I don't really think there's anything for Aussie Swiss, is there? We're not really, there's no specific reading for Aussie Swiss, but what I am noticing here is Pound Swiss is bullish. We've also got Euro Swiss bullish. So you could maybe take away from this that the Swiss isn't great. However, we've also got Dollar Swiss short. So I would say the Swiss at the moment, based on just the top setups, is relatively neutral. But then what we can do is have a look at the economic surprise index when it loads here. So what we've got, so what do you want? Aussie Swiss. Actually, the Australian dollar is doing quite well here, 60%, whereas the Swiss is 33%. So actually, I take it back. Yeah, maybe an Aussie Swiss long position would be more favorable on that side of things. As for the central bank side, I would say the S&B is still relatively neutral. I wouldn't really expect anything from them at the moment. The RBA is still on pause, but definitely not a dovish pause, I would say. I'd say it's still a decent currency to buy based on central bank data. So what do we have on the technical side? We've got a really nice bullish trend that's been established on the H4 here, the 250. Pretty nice, actually, previous structure on the left. We've broken this level, retested, continuation to the upside. So I think for me to get interested on a technical entry here, I would need to see the previous high get broken. So a new higher high get printed, then a low get printed somewhere. So then what I would do is take the fib from the low to wherever the high may be. You know what, let's say maybe something like this. So if we have a really large run to the upside, this 50% retracement would line up quite nicely with previous structure on the left. So again, kind of what we saw that we just looked at on the previous resistance over there. And then maybe a continuation higher. Something along these lines I think would be quite nice. But of course, that's in a perfect world. Whether we get that or not is a different question. But yeah, overall, I would say being a buyer is okay. The swaps would be quite nice as well. So that's another thing. If you are buying Aussie Swiss, you would be sat on some pretty nice swaps. The downside that we've been talking about quite a lot recently on these Swiss pairs is the higher timeframes, like the weekly. So what we often see, and this does broadly apply to things like pound Swiss, New Zealand dollar Swiss. Again, we've been covering this whole concept for quite a while now, is the way that this market moves on a weekly. So what we can see here, rejection off this 200, and we've also got this larger downtrend on this weekly. Here, we did break above the 200, very quickly came down. We tried again here, very quickly came down. Here, we attempted and then continued to run lower. So right now, where we are, I would be very cautious actually being a buyer because, again, based on the historical behavior of this market, generally speaking, we would actually expect it to continue lower from roughly around this area here. So I think there is an idea of being a buyer. Yes, absolutely. But I think the best approach to take, not financial advice, just my opinion, would be to have a trailing stop and be very, very careful with it. Again, watching that weekly time frame, because again, historically, that is a large factor. I've just seen there's a link dropped in the chat for the correlation thing. Was it Sluggy? Yeah, Sluggy asked for that. So there you go. It's already made. Look at them, 10 steps ahead. So like 500 IQ plays over there. And I often get asked why I'm not on the A1 team, or if I'm on the A1 team. And this is half of it. I think my IQ is just subpar. Aussie Swiss and Aussie CAD are good on relative strength. Yes, I do 100% agree with that. I do think the Australian dollar is a good buy at the moment, which again actually does feed into the Aussie New Zealand dollar idea being scrapped. But yeah, again, as I said, specifically with these Swiss pairs, if we look at New Zealand dollar Swiss, we see the same thing. Really strong downtrend on this weekly time frame. Previously we didn't even get to the 200 moving average. We actually been reacting around the 50 moving average, which we've since broken above of. So I would just be very, very cautious. I'm not saying it can't go higher, by the way. I want to make that super clear. I'm not saying that we can't have a continued upside, but again, I would just be very, very cautious that we might have at some point a larger move to the downside and continuation of these higher time frame trends. Pound Swiss, another great example on this weekly time frame, 200 here, 200 here, 200 here, and again, kind of here as well. So hopefully you get my point. Simo, good to see you, my friend. Hope you're well. Did we already take a look at GPAUD long? No, we didn't actually. However, as we did just look at, the Australian dollar is doing quite well at the moment. So daily is still very bearish, but we are seeing a little bit of a, it's not really a range, but the moving averages are kind of flattening out a little bit and almost becoming parallel, which just means that we're not seeing much momentum in either direction, which obviously is also reflected in price. So technically it looks quite good, fib from the low to the high of this bullish run here. The fib zone lines up with this previous structure on the left. So yeah, technically it looks pretty decent here for potentially continuing higher. hold on, the daily here. What is a little bit of an issue for me is I was trying to buy the pound Australian roughly around here. I was really looking for this breakout and sort of continuation. It just didn't happen. I got stopped out on this trade. So I would be a little bit worried that we're going to come back into this level, reach obviously the previous highs and this daily 200 and just reject and stay range bound. So there is that idea that I would be, again, a little bit cautious of. And yeah, GBP-AUD is not getting a reading on the edge finder either, unless I'm missing it, but I really don't think it is. So yeah, fundamentally, it seems quite flat. Technically, I would say there's just a little bit too much risk here. So if I was to get into this trade, or let me reword that. The way I would want to get into this trade is actually to clear these highs, confirm the breakout of this level, retest into this high or the resistance, retesting these highs, and then see a rejection to the upside. That would be, in my book, a lot more of a safe entry. That would just wait for the confirmations to line up. Because at the moment, although we are printing these higher lows, I just think, again, the overall structure here just isn't great, to be honest. Thoughts on the best positive swap pairs? Well, yen and Swiss pairs for sure. So actually what we can do, again, get the edge finder, because you can see this super simply. If we go to the macro scanners, we can look at the carry trade scanner. We can actually just see this straight away. So you can see Aussie Swiss. If you buy it, you get really good swaps here. A 4.35% divergence between both of the interest rates between the RBA and the S&B. Obviously, dollar try is fantastic to be short, but as retail, we generally can't get into dollar try, let alone even pay attention to it. Dollar Swiss, also a fantastic buy. So these, if you are a carry trader, if you're someone that does sitting in trades specifically for the carry dynamic, you would want to be focused on these markets. However, the whole carry trade thing, it's not super simple. The idea is there, you want to buy Aussie Swiss, great. But then you've also got to account for the fact that although these markets are very good swaps, like pound Swiss, as you can see, where is it? Oh, well, it's not here, but either way, pound Swiss is also a great carry trade to the upside. But the overall trend is to the downside. It's not quite that simple. But also then you've got to account for the fact you'd really have to sort of DCA that type of strategy. So there are institutions that do a carry trade approach where their whole idea is just buying markets with positive swaps, like dollar yen, for example. But the way they do it isn't like what retail do. They don't just go in, oh, dollar yen like this and take profit up here. They will basically, DCA or layer or stagger entries. So, and this is actually across the board, not just with this approach, but they will generally, enter here with maybe a 0.1% deployment. So they'll have maybe, I don't know, let's say a 1% risk for the trade. Let's just say, for example, say they'll deploy a little bit here, they'll deploy a little bit more here, they might deploy a bit more there and a bit more there, and they'll stagger the whole risk between different entries. And that's partly due to the size of the positions as well, not just for a risk side. Well, these paid features I've seen on other tools. Yes, look, that's the thing. I mean, the A1 guys, they've reached an amazing balance between the free stuff that they give out, like the videos and the streams, and then, again, the paid stuff as well. It's like there's stuff for everyone. If you can't afford the Edge Finder, of course, there's no shame in that. But there's fantastic free resources for people that are maybe not financially advantaged, and also obviously the payment plans as well. So I feel like I've complimented the A1 team a lot this stream. So I'm going to stop there, but no, they're great. How about GBP-AUD? We just looked at that one actually, Christian. So hopefully that answered your question. Pound and euro are going to range against the Australian dollar and the New Zealand for some time. The fundamentals are just canceling each other out. Yeah, I'm running out of time here, so I need to be quick. But yeah, I'm still very, very cautious on the pound. So, I went through a phase maybe 2 weeks ago, in fact, basically all year, actually, even into last year. I've been very, very doomer on the pound, really. And I still am very uncertain. So my whole thesis on the pound is going to basically continue to crumble. Isn't gone, but it is a little bit more on the sideline now, because we've got Andy Burnham that's come in as a new PM, which did provide a massive relief rally within the pound and sterling. And a lot of the things he is implementing are pretty good. There's nothing he's done that I've really got any major issues with. However, and the big however is here, he's committing to a lot of the cost of living crisis, which is good. Again, not a problem. But then the idea comes in of where is the funding coming from? So I know there's certain cuts in certain areas to provide for other things. And I know a lot of you guys might not care about this, but again, I'm running out of time, so I may as well end on this note. Cuts in certain areas to fund other areas, but the UK is losing money on import-export dynamics. The UK is in quite large debt, and we're currently spending a lot more on welfare than we get in from income tax. So we are technically now a welfare state. So there are all these little things that are really quite structural issues. And if they're not really addressed, and we continue to deal with the cost of living crisis by injecting money into certain areas of the economy, again, it's good, but the funding is going to really become an issue. And I think we're not quite at a position where I'm willing to say the pound is doomed again. But again, my sort of spectacles are on. I'm watching and paying attention to what's going on here. GPA AED just updated to +6. Okay, well, maybe I must have missed it or something. But guys, I'm sorry to. Well, not sorry. I've been talking for the past hour. So guys, it is the end of my stream, or the end of my segment here. So we've got Alan Perez coming to take over the show. I will see you all tomorrow, so don't get too sad. I know you all miss me when I'm not here. But guys, don't go anywhere. Alan is coming to take over the show. Stay safe. Don't get margin called. Thank you for being here. As always, it's been great to talk to you. Enjoy the rest of your days. See you later.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in a live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style, as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, everyone. How we doing today? We are one day closer to NFP. Good morning, Simo. How are you guys doing? Guys, go ahead and check out that offer, 8cap, 20% of your welcome bonus. That is a pretty sweet deal, I will say. So everyone besides the US, but everyone besides the US, go ahead and check that out. If you are looking to switch brokers, it is a great one. Already started off with a great stream here. Thank you, James, to you. Back at you, my friend. Good morning, Max. Good morning, everyone. Really look good today. Well, thank you, man. Well, thank you. This is I wear this pretty often, so I'm happy to hear these things. The gang's all here. The gang's all here. Here we go. Man, what a great day. Another great day to talk about markets. So, from my understanding, not much has developed. One thing too, which is a development, but nothing happened. But that is the development, is that nothing happened as far as the announcement that we were going to get about the Middle East, right? Am I wrong? Am I right? From my understanding, yeah, nothing happened. There was supposed to be a big announcement either Tuesday or Wednesday, and it's been quite quiet. So don't know if I missed something, but from my understanding, there was no announcement. Yet you do still have the prices of oil lower, which is a good sign, I would say. Stocks just continuing the rally there. Lots of strength there. The Nasdaq actually looks quite interesting. So I'm curious to know your thoughts on this. Again, I'm not looking to trade this, but one could make the argument that the Nasdaq could have what one could call a catch up to something like the S&P, right? So let's look at the two of them together. S&P right here, very, very strong relative strength comparing the Nasdaq, right? Look at that. Resiliency near all-time highs, whereas the Nasdaq kind of lagging. Now, from a technical perspective, you had the Nasdaq kind of under this bearish trend line here. You had the breakout of that yesterday. Was it yesterday or Tuesday? Tuesday, you had the breakout, and now you have the potential retest of this zone. You could probably even just do something like this right here to kind of highlight like where it could be at. Are you guys looking at that? Are you guys trading it? Me personally, no, but that could be a really cool opportunity if the right kind of conditions present themselves. But yeah, that's something that I'm seeing there on the Nasdaq. Let me look at the edge finder too to just see what's going on that side of things. Let's see. Nasdaq, are you there? You're not there. You know what is there though? Gold. Gold had a very bullish reading yesterday. What a crazy day for gold. It was up 4.5% at one point. Breaking out there. So we're getting that pullback. Maybe now, maybe today we'll get it. Or we can pull back into this level of resistance, maybe 4,200 or around 4,150, 4,120-ish, that area for some long attempts if you guys are not in the trade. But what a monster yesterday for gold. We'll see if that continues. So that obstacle has now been checked off. I have two things that I need to check off, right? One of them being that 4,200 level resistance. And then the next one, that next hurdle would be 4,500, where you have that 200-day moving average. I'm kind of expecting price to kind of, if it gets there, that would probably be where a price level where you have to like reevaluate and see, because personally, I don't think that the right environment is there for you to see gold back at 5,600 or beyond all-time highs, right? Like that, to me, you would need to see the war ending. You would need to see a softening dollar. You would need to see the money printers turning back on, rate odds kind of cooling, going back into the other side of things. That would be the perfect environment. You still have kind of a kind of normalization, like maybe you have the war potentially easing, and potentially we go from hawkish to neutral. Like those things are bullish things for gold, but they're not the same extreme bullish case that caused this right here, right? For you to see this again, you need a whole different scenario than what we see right now. So for me, I'm like, any upside, fantastic, I'll take it, but I'm going to be skeptical, and I'm going to be mindful of potential levels of resistance where I don't want to be blinded by them, right? I don't want to be blinded and clouded and say, yeah, we're going to go back to all-time highs, and then I fail to take profits here or here, and then it just goes back against me, and I'm left like, why? So I just want to be realistic with my targets with gold, and that 200-day moving average is a pretty realistic target in my personal opinion. So that's what I'm looking at for that. Oil, I mean, kind of just doing the same thing as I did yesterday, within the same range, literally below the 200-day moving average. So if I go to the 1 hour chart there, it's under it, right? So just hanging out there, nothing much. Again, I think that's, yeah, right there, Mega Dancer, right? You hit it right on the head there. I was literally about to say this, but Mega, you beat me to it. NFP tomorrow will change everything, quite literally everything. And so I do expect that markets are pretty quiet leading up into that event, right? Like DXY here, just kind of hanging out here. It's been hanging out in this level here for about 3-4 days now. So I would expect the same thing going into NFP. Once NFP comes out, that would be the decision maker. And if I'm being honest with you guys, so I'm sure we all know this here. Let's go over for all the people that are new into the chat. If you were to get a strong NFP, you would probably see dollar higher, right? You know what? I'm not even gonna try, guys. I'm left-handed, and my mouse is on my right hand. I'm not gonna do that. I'm not. I'm gonna type this in like this. Let's be realistic here. All right. So strong NFP. What does that mean? Likely a strong dollar, strong gold. Let me move this over here. And in a weird way, maybe softer indexes. I'm gonna change the font here real quickly. All right, this is the strong case for NFP. Okay. The weak case would be weak NFP. We would likely see softer dollar. Wait, strong NFP. My bad. Not strong gold. I'm tripping, guys. Weaker gold, softer indexes. Weak NFP, you would see softer dollar. I'm going to do weaker dollar here. Weaker dollar. I had some brain fog. Strong gold. and maybe stronger indexes. Okay. Gonna make this red here. Reason being for these choices, make this a richer red. That's the most I can go, really? Okay. Uh, so these are the kind of scenarios that I have, which we're all pretty well aware, right? So a strong NFP, what that would do is that would, say, okay, the labor market's doing quite okay. We don't have to cut rates to save the labor market. In that case, we can go ahead and look at inflation. And if it starts to pick up again, we can definitely be hawkish. And the vice versa is true, right? So if you were to get a weaker NFP, the Fed has a dual mandate, right? Weaker NFP cracks at the labor market. Maybe the Fed is inclined to go ahead and choose between inflation or labor, and maybe they choose labor, right? Especially if we're seeing some cooler inflation prints already, and if you're seeing lower oil prices in July, that could be just even more cooler inflation prints. We don't know, but that could be the case, and so that can incline the Fed to be more dovish on a weaker NFP. In that case, that would be a weaker dollar, that would be stronger gold, and maybe some stronger indexes. So for those that don't know or probably newer to the stream, take a screenshot of this. This will be your guide here for what could happen tomorrow. Yeah, I was tripping, slugging. My bad, man. You know what? You know what it is, guys. No coffee yet. No coffee yet. I'm just drinking water. No coffee yet. So that's why I had that little piece of brain fog. But I'll solve that here soon. Let me delete this comment here. What is that? Mega says, always good to take profits. Yeah, we'll see. If anything, I'll just trail, right? I'll just trail the profits and kind of just do it like that. This to me is the start of a great thing, in my opinion. And it's only one day of bullishness. So I'm just going to keep it how it is. I got to take some flip-flop beans. I do, man. I do. I gotta just eat them at this point, right? If I'm already having some brain fog, I might as well max it out and eat some beans, some coffee beans. All right, let's see. Let's look at the chat here. Max is loving gold. Same. Are you in any gold positions? I am in a gold position. Let me show it to you. So we're getting a pullback today. I'm going to go to the 4-hour time frame. So this is what I'm in. So this is my entry point was right over here. I'm looking, these are some levels of structure here. So this initial like kind of breakout level, and then this one was the actual breakout level. So the breakout level of like that 4,200 handle was this right here. I'm going to make this, I'm just going to be green. So a pullback into this level could be pretty good to go ahead and take an attempt long. Also too, the edge finder's bullish. So the technicals are in play. The edge finder's in play. And, I'm not even saying this like as a pitch, but this is like genuinely the case. Like, I'm not even joking. Like, I know a lot of people love to trade gold. Like, that's awesome and everything. And I'm usually like, trade whatever's in play. But when it comes to the edge finder's ability to be right on gold, it's actually quite concerning. Like, quite literally, like when this was going on here, right, it was neutral. Like when the initial war started happening, you started to see this, it was neutral. And then it started to become bearish right around over here, right? Like this was the correct call. And then it goes back into like you started getting some signs of like bullish scores. Like, you'll get a hint of like, in the morning, it'll be bullish or whatever. And I started to see that, right? And that's why me personally, I took the more position trade approach where I was like, look, if we're starting to get some bullish readings down here, and if I just zoom out here and I look at the recent price action, I'm like, we're at a relative discount. So I'm like going to take a position swing trade here, stops below this level of structure, and I'm just going to see what happens from here, right? And so you start to get that. Then now as you get to see this, you're getting very bullish scores there. So like quite literally the edge finder saved you from being overly bullish right around here where you should have been avoiding gold. And then right over here when the trend was really starting to get, picking up, you're getting some bearish signs. And now you're starting to see some bullish signs right over there, which is quite literally like goated. So I say that all to say that I'm pretty happy with the decision of trading it. And And this is the pitch. Okay. A lot of you guys trade gold. A lot of you guys ask questions on gold. A lot of you guys stream hop and try to see what's going on with gold buy or sell. No more stream hopping. Okay. You just buy yourself this thing right here, the edge finder, and it tells you for you bullish, bearish, whatever the case may be. And if it's neutral, just stay away and look for something else. So I like that it's getting a very bullish reading on gold. I think a pullback would be nice, you know, for the ones that are not in the trade. 4,200 looks pretty good. Also, keep your eye open for maybe like 4,150 too, like this level right here, like this horizontal level. If you guys see that right here, let's actually measure it out. Let's be strategic here. Fibonacci from low to high. So look at that. Okay, so you have the first pullback opportunity at 4,200, quite literally 4,195, and then this other level here that I have marked up, which is this horizontal level, which could be some potential support, is lined up right here at the 61.8. So those are some pretty key levels there. So 38.2, the 50 to 61.8. I like that. In fact, that makes a lot of sense to me. So if you guys are looking to trade gold to the long side, those will be the levels that I'd probably be looking at if I were you. Not financial advice, of course. W plug, man. It's been a game changer. Like quite honestly, it's a very efficient tool. It saves me lots of time. So it just is what it is, man. It's a gold mine, pun intended. Ha ha ha. Duckling says, "I've recently just started trading. I've just recently started trading itself, but trading only gold as it's kind of a safe haven. No stream hopping. I would say if you're barely getting you into trading, I don't think there's any wrong in like focusing on a certain asset class just to see how it behaves. Maybe you get some technical experience under your belt, right? But then definitely start to branch out into other asset classes, because the same fundamentals and macro that affects gold affects the dollar, right? And if something's affecting the dollar, it's affecting Euro US dollar and Kiwi dollar and dollar yen. Like, you know, these majors are all have the dollar in it. So you can trade, US macro can give you some pretty good insights into the major currency pairs. And then it just trickles into everything. So if you just understand, I would say, like, if you're going to focus on one economy, US macro will open the door for the metals trading, for major currency pairs trading, for the indexes. Like, a lot of people love the S&P and Nasdaq. It's just the way I would approach it. Good morning, everyone, man. Good morning to you, my friend. Pound USD. Okay, so I'm seeing some pound dollar suggestions. So let's go ahead and slap on that chart real quick. And then let me go ahead and look at the edge finder. I think the pound basket's still looking quite strong. Let's see. Let's go to let's just type GBP. Dang, it's still pretty strong. Pound Swiss, pound dollar, pound yen, pound CAD. Okay. So that is looking quite good. With this chart here that I'm looking at it, this is my only thing. Okay. Had you had bought here or here on this quick pullback, you're fine. Participating in pound when price is right here, already leaving the station. You already had 1-2 pullbacks. You know, unless you get another one, then fine. But, like, you know, chasing price right here on pound dollar, you know, you have support here. The bottom end of the range is right here, and the top end of the range is right here. You're a lot closer to the top end of the range than the bottom, right? So if you were to do a market order here, you can already see the risk to reward ratio is negative. So assuming that you're asking for the purposes of getting a new trade, pound dollar has left the station. Similarly with like euro dollar, for example, like euro dollar has already left the station. I bought in on this pullback here. You know, it's already moving. So you're a lot closer, like I said, to the top end of the range than to the bottom end of the range. So we'll see. We'll see what happens. And then also too, you have NFP tomorrow, right? So like, let's say the macro tomorrow just obliterates my idea of going short the dollar. You get some dollar strength and all that good stuff. Then of course that at that point, like the whole trade and the fundamentals behind it is just clouded now. So I wouldn't proceed with that. Waiting for that setup on gold. Awesome, man. Awesome. It seems like it's presenting itself today. So good on that. Planning on shorting pound dollar today. Okay. You're looking to short this chart. So this is the chart that we're looking to short. You're waiting for the Asia high sweep. Okay. I've also noticed that Edgefinder is pretty accurate in scoring gold and Nasdaq. Anything else is not bad, but the accuracy for the two are up there. Yeah, for gold and Nasdaq, I think Nasdaq too has a pretty strong level of kind of accuracy. I'm not really a trader of Nasdaq, to be honest with you guys. Like, I look at the chart, it's something that I have to consider when I'm looking at US macro. Like, definitely looking at these charts. But from my understanding, it is pretty. I know Nick loves Nasdaq too, just as much as gold. So I think the scoring there is pretty efficient too. Yeah, I mean, look at that daily close on gold. It was a happy moment, man. It was pretty strong. You know, it just woke up out of nowhere. You know, you had lots of choppiness. You know, if I'm being honest with you guys, I was kind of like, man, like if we kind of just get up here, I might just cut the trade. Like, this, nothing has been going on, or even just cut the trade or break even. You know, but you had a lot of momentum yesterday, which was very, very good. We blew past 4,200 quite easily, and so I'm just curious to see what happens on the pullback. If that pullback does hold, then this would be just one of those situations where you just trail along the way and let it do its thing. 4,300 on Asian was perfect on Asia. ADP came in weak yesterday. Doesn't it mean almost the same for NFP? You know, ADP is supposed to, in a sense, mimic NFP, right? So maybe that's the case. In fact, you know what I'm gonna do? Let's look at Forex Factory, because I know the analyst expectations changed a little bit. Let's look at that. NFP tomorrow. What is it supposed to be? So previous was 57K. It's supposed to come out at 85K. So it's supposed to come in better than the previous one. So we'll see. What are your thoughts, guys? Like this. I mean, I would. This is a very hard kind of speculation to make, right? An assumption. But you guys thinking strong NFP, weak NFP? You guys let me know. Gold broke up with his girlfriend and now he's pissed. Something happened to Gold. Something woke him up. He got riled up. But you guys let me know. Weak NFP, strong NFP. I think I'll be very happy with an in line with expectations. You know what I saw yesterday too? I wonder if it's changed. I was looking at CME FedWatch. Yeah. Ideally, in a perfect world, a weaker NFP print. I was looking at probabilities. No, they came back up again. It was for a brief moment, but you saw basically what I saw yesterday was like just one rate hike, and that was it. That was what I saw yesterday, but it's been moving around. It's been very volatile. That is true, Max. That is true. Who hires? Well, we're looking at June, but yeah, who hired in June? Was World Cup? World Cup was in June. I wasn't a humongous watcher of it. Was World Cup in June, or did it end before June? I know with Canada they had like a really strong bump up in employment numbers, partially due to the part-time employment of the World Cup staff and vendors and across the board. Like, you know, you had restaurants hire up more. You had all these services business hire up more because of the World Cup. Did it end in June? Maybe. I don't know. But U.S. services economy is already kind of up there, so I don't think they would need to hire so much. You know what I mean? Yeah, that's what happened with Canada. Supposedly, right? That was the speculation, is that Canada saw this bump up there, lots of part-time services jobs. It ended 19th of July. Okay. Yeah. Yeah, 19th of July. Okay, we'll see. Am I gonna close the trade? I'm gonna let this. I'm gonna let it do its thing, man. What I'll do is so I can react pretty fast. Like I'm gonna be at my desk when things are happening. I'll know fairly quickly the context and the kind of or the implications of the NFP report. So if it's like in line or whatever, you probably see some volatility, and I'll just let it do its thing. I wouldn't touch it. If you see something super super strong, then potentially I'll just in that moment just close it out for what I can. And if it's weak, of course, and then I'll just let it ride. But I usually just sit through the news event. I have no problem doing that. It is what it is. I'm sized appropriately. The trades are now at break even too, so it's like it doesn't really matter. The only thing that would really suck is like if you have massive slippage or whatever, you get taken out for break even, and then it just continues on going with you. That's just the name of the game. You know what I mean? It happens, and if that happens, like don't beat yourself up. You just wait for another reentry opportunity. So that's it. But I'll be holding through the event. Me personally. Fast hands. Yeah. Well, the only downside to that, if I'm being honest, is whenever there is like a big news event like that, the spreads start to widen. So the brokers widen the spread. So you won't get the most attractive execution price. But again, it's better than just letting it hit your stop loss and just watching it. So if you can have fast hands and then you can kind of digest the NFP number and know what the implications could be, then you can just kind of jump the gun there a little bit. Let's see. Pretty slow start to the day though. Really nothing going on. It's probably going to stay like that too for the remainder of the day if I'm being honest. Bitcoin, what's Bitcoin doing? Nothing. Nothing. Come on. Get me to the 200-day and I will short this thing. What else could I look at? Let's look at Aussie Kiwi. That was one thing that I was looking at. Didn't break that level though, so it's nothing I can do anyway. I'm looking for a break of this level of support here, and then also to the break of the 200. So I'm not gonna jump the gun there, but let's look at the score for that. So Aussie, let's look at Aussie Kiwi. It's not showing up because it's neutral. Yeah, nothing I can do there. Let's look at sentiment. Yeah. Let's look at the puts call ratio on gold. Let's see if it's improved in our favor here. Gold. Still some high call volume there. Let's look at the net options flow as well. Let's see. Still in the bullish side. So I like that. Unemployment news is unemployment. No, it should be coming out here soon in about 3 minutes or so. So yeah, I'll go ahead and watch that with you guys, and then I'll transfer it over to Nick. I think he's coming up right after me, if I'm not mistaken. In fact, I have it right here. Let's see. Yeah, so Nick comes up right after me, right as the unemployment numbers come out. Yeah, we should be good to go. Let's see. What is this expect? Oh, it's expected to be higher than previous, 203K. What do you guys think, guys? Real quick in the chat. Weak or bad? Weak or bad, both the same thing. Higher than expected unemployment claims or lower? What are we thinking here? Let's look at retail sentiment. Gold, majority long. Well, I am retail, if I'm being honest. Thoughts on GJ? Yeah, actually, yeah. Let's do that. Last 2 minutes here. I'll talk about yen. GJ included. I think that if you were to have, I think like this could be the buy the dip. This very well could be the buy the dip at that 200-day moving average. You have JXY as well at a key level that I voiced that I wanted to buy at right here. So JXY is there, dollar yen's there. The only thing that I'm being patient on is the NFP report. So like if you were to get more dollar softness off the backs of a weak NFP report, then I think that, not only the dollar yen, but I think that also like you have other pairs that kind of take this lower, and that you have an opportunity to get a bigger discount and a further unwind. But if you were to get the case of a very, very strong NFP report, that's somewhat hawkish there, and that keeps the carry trade flowing, right? So like the big thing that kind of influences this chart to the upside is the carry trade. So if you have, for example, if you were to get a weak NFP report, this is what it would pretty much mean for rates. So if you have a weak NFP report on top of a previously weak NFP report on top of a cooling inflation numbers, then the rates for US would likely be something like this. So somewhat flat, maybe one hike, but nonetheless somewhat flat. And then you have Japan, which is trying to hike aggressively, right? So this right there this scenario A, which is weak NFP report, could cause dollar yen to kind of decline a little bit. But if you were to get the opposite, if you were to get scenario B, where you have NFP come in stronger than expected, well, that can keep the rate hike odds alive, where you have US kind of stair stepping upward in rates. And then also, Japan, same old story, they kind of hike rates as well. What that does, the difference between these two is that scenario A has the rate differential narrow, whereas scenario B keeps the scenario the interest rate differential in favor of the carry trade. So that's what's important there. So I'm going to be patient on NFP. Again, if you have a weak NFP report, that could cause the Fed to be a little bit more dovish, and maybe we have a little bit more squeeze we can get out of dollar yen to the downside. If that's not the case, this could be a pretty decent buy the dip. You have JXY lined up at the 200-day. You have this right here lined up at the 200-day moving average. You have some pretty strong wicks here pointing to the upside. So that's what I'm watching. And then also two, we have unemployment claims just came out at 199, so very close to previous. Nothing crazy there. But guys, thank you guys so much. I went a little bit over here. I'm going to transfer it over to Nick, and I'll be back on for my second segment in about an hour or so. So see ya.
Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. Good morning, everybody. Welcome back. Hope you're doing well. Shout out Alan. That was a great segment. Just listened into everything he was going through, watching gold this morning, unemployment claims coming out this morning. Quite a busy market out there. Stocks are just modestly coming off yesterday. Well, I should say the last 2 days we had this ginormous rally in stocks. Oh, hold on. Can you not hear me? Second. Somebody's saying they can't hear me. Can anyone confirm that you can hear me or not? boost mic. So weird, man. My mic issues have been going crazy. Hold on. Is this better? Am I louder now? Let me know. Hopefully it's okay. We've been having some audio issues for some reason on my mic. Now it should be better. Okay, cool. Thank you, guys. Anyways, yes, last few days have been interesting in the Nasdaq, looking at stocks, looking at gold. Gold has been explosive to the upside. I am looking, probably like a lot of traders, at looking at some potential pullback buys on gold. I'm also watching silver. Still a bit low. Yeah, I really don't understand why. Let me see if there's anything else I can do. Maybe this is better. I have echo cancellation on. I don't know. Apologies, guys. I'm trying to sort it out. Mic volume is maximum on my thing, so let me know if that seems fine. You need to get a new mic, Nick. It is definitely not the mic. This is a pretty nice mic. It is plus it worked for the last 5 years or whatever, but something in the settings or software that I'm missing. But what's confusing is I have the exact same setup in 2 different locations. This is my home office, and then I have the in-person physical A1 office. And sound was low on both, so I'm curious. It may be a software thing. Works fine on my side. Okay. Yeah, sorry about that, guys. I'm not exactly sure what's going on. So, anyways, looking at gold here, could be StreamYard. Yeah, I bet you it is. Yeah, everybody turn the volume up for a little bit. Sorry. Well, I'll sort it out, I guess. I'm not sure exactly what else, but I'll keep playing with it. It's probably some setting on my mic within my computer that I need to adjust. That's not within the streaming software, but we'll see. It works well on my side. Okay, good. We'll give it a go here, and we'll go from there. Prop shop trader, CFD trading for stocks or just normal stocks? Joey, that's a good question. So they offer. Well, pull it up on their website. Take a closer look because I want to make sure I speak correctly. But they offer sort of equities. They offer futures. If you have any questions, the support team is phenomenal over on Prop Shop Trader. The team over there is awesome. If you have any questions, reach out to them. They can hook you up. They can get you some information. Scan the QR code right here if you want to explore it. But yeah, if you're somebody who trades equities or futures, check them out. So oil is higher today. Gold is also higher today. Let's talk a little about this oil chart. So oil right now, I think, is sort of suggesting modestly a general push lower for the time being. The trend, the path of least resistance, I think, for oil is to continue lower. I think at some point, the fatigue of things are going to get real if we don't come to an agreement. That story has been playing out for months on end. I think the market is kind of looking past it and not really expecting any serious escalation at this point. Obviously, if something does happen, up we go. Oil can break out, but at least we called it the tea leaves yesterday in the video. The tea leaves are suggesting that the White House does not want to persist in the Middle East. They don't want another forever war. And that might mean creatively exiting the stage at some point, the theater, if you will. And if that is the case, then I think oil's going to like that because right now it seems like Iran and Oman are making some kind of an agreement, and it's almost petty. They're like, yeah, the U.S. has no involvement in this. We're sorting it out ourselves. But the U.S. might just still claim that victory and just say, yeah, we got them to secede. Like they're caving in. They're going to make things happen. But then there's also this last little component, which will be interesting, which is I think there was talks of a 7% tax on traffic through the Strait of Hormuz. So tricky, right? I don't know exactly how that plays out. I don't know if the U.S. accepts that. They might. It might just be, you know, how could the White House adapt to that? Well, they could say, well, then we're gonna do some other thing, right? They might say the tax can sit there and continue, but we'll do something else. And then they could still say oil's flowing freely, etc. I don't know. It's hard to predict, and so I choose not to. When it comes to geopolitics, when it comes to Iran, I don't know what's going to happen next. Right now, it seems like de-escalation is the theme. I'm going to just trade that direction, and if it changes, then I will flip to the other side. There is no shame in flip-flopping when it comes to trading. Sometimes people, tease on my videos. They'll be like, Nick, you were bearish on gold, and now you're bullish on gold, and you're flipping around. And the answer to that is that's what you're supposed to do as traders. Like as traders, you are supposed to. We're not just passive forever investors here. I mean, some people are. Some people, are forever bullish on something or bearish on something. But as traders, we're not supposed to be permanently set in one direction. I traded the downside this year in gold, and now I'm looking at the bullish side. And if something changes again, there's no rules that say you can't pivot and become bearish again. Now, I will say, from a drawdown perspective or losing streak perspective, flip-flopping is not ideal for my style of trading. If you're a trend follower, if you're somebody who likes follow-through moves, I made a lot of money during this move in gold and silver. That was a really nice, trendy environment. I tend to do the best, make the most, when you have that type of environment. So trust me when I say flip-flopping is a necessary evil, but it's also not the time that I make the most of my gains. Successful traders are adaptable. Exactly. Get some flip-flop beans. Exactly. Adapt. I think that there is, and I genuinely mean that, there are a lot of traders out there who are very, very emotionally tied to the direction of an asset. What I mean by that is there's a lot of people here who they really don't like gold and they think gold's going to keep trending lower. They think it's a dumb rock, right? There's other people who, cannot accept gold's going to go down ever, right? There's people who are permanently biased. They hear the central banks are buying and the fiat currency is going to zero and national debt is skyrocketing. And they think that because that narrative, which by the way, that's been around for 1,000 years, that is always the narrative with gold. Because that narrative exists though, does not mean that gold's going to go up every day, month and week and even year. Gold has negative years. That story can play out. But those are really, really, really long-term themes. They're not every week themes. So just because central banks are buying, national debt is rising, et cetera, does not mean as a trader, we should just ignore bearish signals if they come our way and say, no, well, national debt is rising and governments are recklessly spending and central banks are buying gold. So gold always go up, right? That's why markets are really, really humbling, is because you do everything you want to do, but you cannot argue with price. Price is law in trading. So if you're out here and you're like, you were looking at this and you're saying central banks are buying, gold is never going to go down, and then this thing hit you like a brick wall going 60 miles an hour, guess what? That's trading. Trading is hard for people because in a lot of aspects in our lives, you can be purposefully ignorant, you can deny things, because it's not objective. Price is objective. Price hits you in the face if you're wrong. You can't ignore that. And so what I've found over the years of doing this, don't argue with price, adapt, move along, admit when you're wrong, and don't be a perma bull or perma bear. Unless you're long-term investing and you have a diversified portfolio, even then I think having a permanent view is a bad idea. don't be a perma anything. It's a really bad strategy, because if you're a perma bull or a perma bear, what that tends to mean is you ignore information that contradicts your view, and that can get you in a lot of trouble in trading. So right now, the bullish view looks great. I think you've got a couple tailwinds here. I heard earlier during Forex James's segment, somebody was asking about a VIX event or a possible uptick in the VIX this year around this time. Take a look at VIX seasonality during the months of August, September, October. You've got a bullish tilt here. The last 10 years is pretty strong evidence to suggest that the VIX tends to, historically speaking, go up during this time. Without the war, do you think gold would have been higher? I think it still would have been range bound, to be honest. I think it would have gone sideways, because we had inflation rising even before the war, and I think that would have had a negative effect on gold. Higher inflation, higher interest rates, stronger dollar, weaker gold. That's the way that lines up. Every time I explain that inflation going higher in the short run is bearish for gold, somebody's out there and they're like, they turn their head. They're like, what? Inflation higher means gold lower? Let me clarify. I say it, I recite this. You can clearly tell I've recited that once or twice in my life, many, many times actually. But when you are talking about inflation going up, short term tends to be a bearish factor on gold. Long term, if you have consistent, persistent high inflation over long stretches of time, that is insanely bullish for gold. But that's different. That's long term. Why would that be different? Well, high inflation in the short term, central banks ratchet up interest rates, holding dollars becomes more attractive, savings accounts yield more. But if inflation erodes purchasing power over the longer term and it is persistently causing that issue and not going away, the price of everything flies higher and the fiat currency gets eroded over the long term. That makes gold go up. So there's two perspectives. When people argue, is inflation good or bad for gold, they can both be right. It depends your time horizon. Typically, high inflation over a long stretch of time is good for gold. Rising inflation in the short term is bad for gold because it causes, especially if the economy is holding up okay, that is especially bad for gold, right? Because a strong economy means Fed can hike rates to combat that because they have wiggle room. By the way, that is not the environment right now. I would argue you have had on economic growth statistics several missed metrics here recently. GDP growth came in softer than expected, surprised negatively. Services PMIs surprised negatively. Consumer confidence surprised negatively. So we've had some economic growth that is softer than anticipated. And this week, guys, we did get two, let me see, today, yep, we have our latest. Look at this. Oh, guys, get ready. I'm about to brag about a new Edge Finder feature. What's new? It's a daily occurrence here. Somebody said there's too many ads in the stream. You probably just want to exit the stream now because we just built a new feature on Edge Finder. I'm going to be annoying. Stick around with me. Okay, so Jolt's job openings, worse than expected. ADP numbers, worse than expected. All eyes are obviously on tomorrow's non-farm payroll number. We have not had a release since July 2nd. So we've got a new data point for July numbers coming out tomorrow. I can't hold myself back any longer. We just added a new column here. It is coming for this table as well. We added a release column, which is just telling you when this data point was last released. So why this matters is you can see that this week, without having watched every single live stream, every single event, pulling up the calendar every single day, ideally, your asset scorecard should still be able to show you when this data point last came out so that you can get an idea of when new information might be coming and or how recent, how fresh the read is. So look at this. The freshness score here, right? August 5th, August 4th, August 6th. This week has been heavy on the jobs data side. Jobless claims came in just modestly better than expected. So that's bearish for gold. Remember, gold likes weak jobs numbers. That keeps the Fed from hiking rates, or theoretically makes it more difficult for them to do so. All right, ADP. ADP was weak. That is good for gold. JOLTS job openings, weaker than expected. Good for gold. You see how that works? It factors that in, and without you having to have a PhD in economics, that's my line, my go-to line there, Edgefinder maps it out, scores it in, and is now factored automatically for you. Data release dates are a really nice touch. Thank you. You like this stupid little column here gave us way more problems than I care to admit. And it's been 8 hours of work to get it going here, but it's coming. I won't go into detail as to why it's been so difficult, but sometimes in software development stuff, something that seems like it's going to be an easy addition takes you all day long. I said this the other day, but when I die, if I get a statistics, I always think about this, if you died, your end of life statistics, I want to know how many hours went into Edgefinder, because it's at least 2 or 3 hours total. Why not make it a monthly subscription? I'll tell you exactly why. You want to know why? You want to know why the Edgefinder is not a $20 to $30 monthly subscription? The reason is, I personally don't like subscriptions. We do offer a way for people to buy Edgefinder on a monthly subscription basis, or not a subscription, a payment plan option. That is something that we do offer. By the way, if you are interested in that, here's how you can do that really quick. Hold on. I'll just throw that in the chat. Here it is. There. If you are interested in payment plans to make it more affordable, we do offer that. Ballout's got it. So we have a lot of overhead costs in building the software. We have a staff of people. There's 10 people behind the scenes here. There's upkeep costs on our side. The upfront cost helps us with development and investment in the tool. But the other thing is, it's a really, really good deal to buy Edgefinder, a stupidly good deal if you are a serious trader and you plan on trading for the next 10, 15, 20, 25 years. Because you pay once. And then even though the price of everything goes up over time, inflation, etc., instead of paying a ongoing subscription forever, which inevitably subscription prices also go up for software companies, you pay once and you get access. It's not a great deal if you're a come and go trader. If you're someone who's not very serious about this stuff and you're going to be gone in 90 days, Edgefinder is probably not a great deal for you. We've done this intentionally. We don't want passerby traders to use our software. We prefer serious, somewhat veteran traders who see themselves doing this 5 years, 10 years, 20 years. If you're someone who bought Edgefinder, think about this. There has been people who bought it, 4 years ago, who have been using it for 4 years and have never paid for any additional features to be added, have never paid ongoing subscriptions, have watched the tool get better and better and better, and paid one time. It is a stupidly good deal for people who buy it and who intend to use it for the long term. It's so cheap. Comes down to 50 cents a day if you use it long enough. So that's intentional, because that's the product I would want to buy. So I've built and set up the product to be that way. Okay, I'm sorry. I'm ranting way too long on this. You get my point. It's a wonderful deal if you intend to trade for the long term. That is intentional. We want to reward traders who are going to be here for the long term. Buy it. Use it forever. We'll continue to support it. Our work is supported by new traders buying the tool and continuing to propel the project further. How are the economic numbers being updated? Blood, sweat, and tears, and a lot of APIs and a lot of automations. And stuff breaks and we fix it, and I haven't slept in 5 years. Okay, so let's see what else we've got here. So gold, let me cut to the chase on gold. It is probably the most interesting chart to me right now. I would love to see a bit of a pullback. 4150 looks really attractive. That's probably where I take a stab long. 41. I like the 50% to 61.8% retracement. This looks really good. Nick, how many hours a day of sleep? I'm being dramatic. I sleep pretty good. I think I'm like a 7-hour sleeper. I usually can't sleep much more than that. And that's not, I don't usually need much more than that. I'm lucky in that way. Some people need 9 or 10 hours. I'm okay with 7. I prefer 7 over like anything less I don't love, but 7 I can do 7. Yeah, see that's pretty good too. If I do 4 hours that's low, man. That's crazy. I can do like 6. I just would need a nap later in the day. But yeah. Look at that. Gold, silver continue to kind of pull back. Silver's another one that's kind of intriguing to me on the long side here. If I go silver, silver's also got a +6. Score went positive July 24th for silver. I like this one too. I may be long silver and gold at the same time too. That's a possibility. I honestly think silver's chart may look even smoother right now than gold's. The 50% retracement, that round number $60 an ounce level. So I would not mind at all a little bit further squeeze to the downside there. Hey Nick, I'm a new trader. I'm going to sell at 42.43. 42.43. Okay, so you're short up here. I personally, again, there is no one correct way to trade. So I'm not telling you that your idea is bad. For me personally, I only like the long side here. I don't have any interest in being short precious metals right now. I think you have a lot of conviction right now to the upside. We've flipped bullish. Flow is really good. I understand like when price goes up for a very long time, personally, I also was kind of like the person that when something goes up, I think all of us have a natural instinct to be one or the other. Let me ask you guys this. Naturally, I'm not saying necessarily what you trade now or how you trade right now, but when you see price go really up or really down, let me ask you guys in the chat. Do you naturally want to fade? Do 1 for fade? Or 2 to join? So let me explain what I mean by this. Naturally, you see a price shoot up like this. When you first got into trading, your first instincts, do you think it's better to try and bet that that's going to come back down? Contrarian? Or are you more number 2 where you're like, when I see something shoot up, I want to join the move? Which one are you? And I will say, full wholeheartedness, this is my natural state. Forever in trading, I would see something go up, I'd want to sell it. Something shoots lower, I want to buy it. I don't necessarily think either one of these is right or wrong. So I'm not coming out as an elitist here. But I have found that while this was my natural state to try and fight moves, I have found a lot more success in my trading being the one to now look at joining moves. Betting on the retracement, betting on the reversal. I in no way am saying that traders cannot be successful doing that, because they can. There are people who do that. There are people who love that trade. But for me, it's not like the conducive one. I am way more successful looking to join the pullback, and I would rather completely opt out. I don't like to trade the fade on short-term trades. Long-term investing, contrarian all the way. I like to, if I'm investing in something, you tell me Amazon is down, you know, down below its 200-day moving average long term, I want to buy the stock. I don't like to invest at highs. I like to invest when people really don't like something and I disagree. One of my best in my kind of more aggressive portfolio, I went like pretty sizable, no leverage, so I'm not going to say that. I'm going to say that carefully. Not leverage, not doing stupid bets, but in another one of my portfolios this year, the portfolio is doing insane. Like I think it's up like 13 or 14% since I started it, which was like 2 or 3 months ago, or 3 or 4 months ago. At the same time, I think the S&P 500 is up like 2%. And I bet my convictions, which is I like software companies. If you've listened to my rants about software, it's my business world, right? They say invest in what you know. I really like software companies. I picked a collection of software companies that I think are leaders. I bought the IGV, which is the sector or the software ETF. This thing is super contrarian. Like it's super contrarian to like software 6 months ago. So I like to invest that way. But trading wise, absolutely the opposite. Trading, I'm a momentum trader through and through. I want the chart to be rising for me to buy, and I want the chart to be falling for me to sell. Right? Nick, could you do a video about bonds and on Edgefinder how to use and read the yield and treasury curve? Got a question, or I got a video for you. Hold on. Links to videos. Here it is. Check this out. I have that saved because it's so important. 10-year yield video right here. If you want to understand the 10-year yield and the VIX, I have a video all about that. Let me see. Are you just using the 4-hour time frame when trading gold? I also look at the daily and 4-hour. That's predominantly what I trade from a shorter term perspective. And yeah, guys, we're about out of time. I've got Miko Audu up next. He's going to be taking over the stream, talking about trade setups and ideas that he is watching in this market. I'm excited to see what he's got here lined up for us today. Before we do that, real quick, if you are interested in trying the Edgefinder, let me see. I think we do have this somewhere. Yes, we do. Here you go. If you guys want to try out the Edgefinder, scan the QR code right there. That'll set you up with access to our free Edgefinder course. If you're somebody who's been considering getting access to the tool, if you want to explore it first, there's your chance to do so. Alternatively, head over to our website, a1trading.com. We're in here building all sorts of tutorials, guides on how to use Edgefinder, all the features you get access to. So if you want to spend your sweet time going through and take your time on it, see if it's the right tool for you, that's a great way to do it. Just head over to the website, tutorials. So with that said, up next, we've got Miko Audu taking over the stream to talk technical setups here today. Don't go anywhere. He'll be up right after this. If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by 1-step and 2-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Okay guys, what is up? Hope everyone is doing well. Glad to be back for another stream. As always, I'll go through a bunch of different markets, some which I'm looking at maybe a bit more intraday, some which I'm looking at a bit more swing, kind of give you guys my watch list for the remainder of this week, but mostly kind of gearing up for next week as well. If there's any particular requests, any markets you guys want me to take a look at, feel free to stick it in the chat. And if, again, any particular timeframes, let me know as well. I'm pretty flexible. But yeah, I think I'll start with the dollar. That's always kind of my main focus week on week, primarily trade currencies. And yeah, we do have a big day tomorrow with NFP. We had a pretty big week last week, a lot of bearish momentum, and I'm pretty bearish USD. As long as structure maintains, and what I mean by that is, if I go to the daily chart, as long as I don't see evidence of price breaking back above this level here, I retain that bearish bias, and I do expect a lot more downside. I'm looking around 98.5, and my assumption is based on the higher time frames, because we've been in this long consolidation for about a year or even longer, actually. And at one point, it did look like price was breaking out. It did look like we're having the breakout, and potentially there was a lot of upside. I talked about price potentially coming to 104. But we never really got going. We never really saw price continue that trend. It was always the breakout, and then we just consolidated for a few weeks. And then, of course, we had the Fed last week and a really strong bearish candle as the aftermath of that. We've closed back within the range. So for me, this is like a textbook situation of breakout, no real follow through, close back within the range. And typically, normally what we see from that is more downside. And I would be looking at not necessarily a move all the way back to the opposing side of the range, although that could be the move. I would be looking for the midpoint of this range. So a really handy tool is whipping out the Fibonacci, drawing that from the low of the range to the high. It doesn't have to be accurate completely, just more or less the low to the high, and just kind of highlighting that midpoint of that 0.5 area. And that is normally a good target for a range, because not always do you see the full swing of a range, but quite consistently do you see a push to the midpoint. You can kind of see last time we rejected resistance, we kind of got to the midpoint and price reverse, not quite to the opposing side. So the midpoint is normally the safe bet. Of course, price doesn't always get there even as well, but it is typically the safe bet. So as long as we do stay below this area here, I will remain bearish on USD. So I'm looking for longs on euro, pound, etc. Maybe that could be a bit of an aid for gold as well, seeing some upside too. But it's very, very important that we hold this zone here. So if NFP does give us some strength for USD, I'm basically going to monitor that level. And as long as that can hold, I'm just looking to short basically the momentum we see on NFP. If it takes us higher, of course, it could very much take us lower. But yeah, in terms of the technicals, we're looking pretty bearish. So I'm looking at hopefully another up move for USD. Hopefully we can get that just because this week's price action has been really kind of corrective, really stale. Hasn't really seen much momentum, and there's room for another retest. I'm looking to see if price can come back and retest resistance here and then give us a sell. So I'm hoping for that one more push up to get that short, provided we stay below resistance. So that's very much the take I have for USD. So hopefully I can find some opportunities, get involved in euro, get involved in pound going into next week as well. Have you lost where I have actually? Thank you for noticing. We can take a look at some of the swing opportunities I'm gearing up for. Gold, I know a lot of people speaking about gold, but again, very interesting price action. I'm very much interested in trading gold as well. Critical move this week, basically what I was waiting for, because maybe the past 2.5 weeks I've been speaking about gold, saying I'm not really attracted to the price action, really flat, really corrective. I don't really want to trade it. However, things have changed dramatically. This candle here basically changes everything. So I am very much bullish now on gold. I have been looking for buys. It's just I've been very patient to get into any, because looking at where we're located in the higher time frames, the weekly chart, the fact that we've taken out this wick, quite naturally do I expect a retracement. Whether this is going to be the full swing that gets us back to highs, I have no idea. Or is it just going to be another up move for maybe 2-3 weeks and then eventually roll back over? Personally, I'm not really too bothered, because I'm not necessarily trying to trade that full move. As long as I can get a couple days, maybe a week's worth of upside, which is pretty realistic, I can walk away for a pretty decent profit there. So the plan for gold is pretty simple, just looking for pullbacks. Now, the area I'm considering looking for opportunities first would be this high here, 41.64. And to be honest, even if we pull as deep as this area, I'll be looking to buy too. It depends how we get there. That's the most important thing, because we've seen strength, which implies a lot of buying pressure, the buy zone control. Now I want to see kind of corrective, more slower price action on the way down. If that holds, if we can see that corrective move, that implies to me that buyers are likely still in control. This is just maybe some profit taking, a healthy correction, and I would expect further upside. So the first area I'm looking to do some business would be that high. Second area, as low as 40.60, I would be looking to take buys as long as we stay nice and corrective. So I like what I'm seeing there in gold. Silver, not quite the same situation, I have to admit. Silver still needs a bit of time before I like the buys. I mean, it's a similar setup, but there's one key technical difference, which is price is trading into this high here at 63. You can see with gold's price action, we broke the high, kind of the corresponding high. We broke through that with some real strength. Whereas in silver's case, we're kind of still trading into it. Doesn't mean that silver can't follow along and see some more upside, but I kind of still classify silver as trading within inside this larger range. So me looking for pullbacks and buys isn't necessarily optimal. And that's really where where I kind of pick and choose which markets I want to trade, because I trade a wide range of markets, especially when I'm swing trading. And I'm basically just picking and choosing which makes the most sense, because there's a lot of correlation across the board: gold, silver, metals in general, commodities, or other commodities, indices. They do tend to move the same direction. But when it comes to entry and stop loss and take profit, that's where you have to get a little bit more precise and which one is actually looking a bit more fruitful. Although I kind of do expect silver to eventually follow suit and follow the pattern, I do think gold, just because we've broken that high, just gives me a bit more, sentiment to trade gold rather than silver. But yeah, I wouldn't be surprised if gold does pull back into structure here, holds support and sees, silver pulls back into support, holds structure and sees more upside. And another swing opportunity I'm keeping a close eye on is Nasdaq. I really do like the opportunities when the indices they all kind of fly and see a lot of momentum, and one is kind of lagging behind the other two, or the other 3 or 4, whichever indices you're looking at. But primarily I focus on the Nasdaq, the Dow Jones, and the S&P. So when 2 of the 3 have made new all-time highs and the other one hasn't made new all-time highs yet, I'm always very interested in that one, because typically that's the catch-up trade. Because if you take a look at the S&P, that's just gone and made new highs. So as you can see, new all-time highs there. And of course, if you take a look at the Dow Jones, new all-time highs there as well. So these are very, very bullish, probably due some pullbacks now. Take a look at the Nasdaq. We're kind of far from all-time highs. There's still a long way to go. So the catch-up trade is trading the Nasdaq back to the all-time high, expecting it to kind of catch up with the S&P and the Dow Jones. Of course, they all have their reasons why their price is faster and why price is slightly slower, but just from a technical and a general sense, they naturally do catch up with each other. So yeah, Nasdaq, I do think there's a lot of opportunity to swing this back to the high, and especially the technicals follow suit. It's not just because we're seeing other major US indices bullish as well. It's the technicals do line up that way. We're taking out key highs as well. I think we've just basically come into resistance here, slightly taken out that high. So you can see resistance consistently failing, a lot of strength. The likelihood is that we do continue that. So the first area of interest would be this zone. The second area of interest would be this zone here. So what is that? 29,150 and then 28,500. Those are the 2 zones I'm keeping a close eye on. And I really like the opportunity as well, because the risk reward is quite large for the situation we're in. Because typically when I do get this type of trade, when US 30, or it doesn't really matter, if some other major US indices are bullish and all-time highs, and the one that hasn't made the new all-time high new all-time high yet. It's normally fairly close, so the risk reward is not always quite large. But in this case, it looks pretty decent to me. So keeping a very close eye, and hopefully I can find some opportunities on a pullback. We are coming to the zone pretty much. We'll come into the zone pretty soon, so could be some opportunities maybe the next 24 hours. This is the 4-hour time frame, so I'm not expecting an instant opportunity to enter. I'm always using candlestick patterns to enter, so it could take maybe 2 or 3 more candles to form, and of course we might even break through. But those, I would say, the main markets I'm looking to swing, especially predominantly 4-hour chart. Predominantly 4-hour chart. In terms of the DXY bias and the opportunities I was just speaking on, that's probably a bit more intraday. A bit more intraday. I mean, I suppose I could be looking for some 4-hour trades as well. It depends on the pullback, and it depends on how euro and pound kind of play out, because we can see prices trading to some resistance right now. I need price to pull a lot further down before I do look to buy euro. We do have some zones slightly above us, which I'll be a little bit careful with. But if euro can pull back as deep as this, that would be brilliant. I'd much appreciate that, because I'm not really keen on buying euro in terms of where we are. Number one, we're looking quite tired. And number two, we're rejecting resistance pretty well. So if we can see that bigger pullback on the DXY to give us this move and then the push, that basically corresponds exactly there for euro and pound, the exact same situation as well. Pretty much copy and paste price action for both of them. Again, if pound can push back into support, I'm keeping a very close eye on buys around that 1.342 area. And then pound, I'm looking to take us back to resistance as well. And those are my favorite opportunities. I'm not in any positions at the moment, Christian. I did have some shorts on dollar CAD this week, and I had a couple of trades on euro which didn't play out. I didn't manage to get the re-entry in dollar CAD. I was actually busy at the time. I had some shorts over here, and I did get stopped out just, and then I was looking for the re-entry on this candle, but I was out the house at the time and completely forgot to check the markets, and I missed the trade, unfortunately. I had some nice longs on pound USD last week, just before the Fed interest rate, and I was in some shorts on Aussie dollar, which I closed out around break even as well. But since then, no new positions, to be honest, and probably nothing which I'm looking to click the trigger on right now, to be honest. Gold still needs a bit of time. Nasdaq still needs a bit of time, although maybe 24 hours that could change. The USD pairs, I want to see some retracement there as well. They're coming to resistance. So yeah, nothing really which I'm looking to buy just yet. Maybe Nasdaq is the closest one to get involved with. BTC can absolutely take a look. That one's been quite interesting, actually. It's just been chopping around all over the place. Not the cleanest price action you ever see. But I'll start with the higher time frames, and I'll go a little bit more intraday as we progress, just to give us some context, because Bitcoin has been trending down pretty well. It's seen some new lows past this point. Just there is room for a bigger pullback. This was our last major high in the weekly chart, and this is our last low. I wouldn't be surprised if Bitcoin does something like this just to continue lower. I don't think we're quite ready yet to see another bullish swing. I think we're going to spend some time maybe consolidating, maybe kind of fizzling out, similar to what we did over here, before maybe we can talk about those big buys again. BTC, there is room for up before another move down. Until price kind of breaks structure in the higher time frames, I'm not really going to be forecasting any major bullish swings or any kind of like bull runs or anything like that. In terms of the more intraday price action, very, very choppy, and I'll probably keep it very short term in terms of opportunities, because I don't really know who's in control. We're seeing higher lows. Now we're seeing lower highs. Price is not really breaking support, not really breaking resistance either. So if you really want to be sensible and keep it clean, I'll just draw a box around that, label that as consolidation, and probably move on to another market, just because I don't think this is the best market to be looking to trade, at least from how I trade. I do like the fact that we're holding on to some resistance, and the fact that we are quite corrective into the high. So that could give us some downside, but then again, I don't expect much more than that. We're coming directly back into support. I would, if I was taking that type of trade, I would be looking to close the trade, or at least the most of it, as we approach support. So you don't have a lot of room to play with. It's not like Bitcoin is trending cleanly and we're looking for pullbacks and we're flowing with the market right now. We're kind of just chopping around between resistance and support. So if you're looking for opportunities, I would keep it short term, maybe a kind of a sell like this to finish off the week, and then I'll close my profits there, or at least take the majority of it until price kind of makes its way past resistance here or past support here. I don't see much kind of big swing opportunities. If price breaks support here, then yeah, I just expect us to trend lower and the overall bearish trend to continue. If of course we break high here, well, that could be, did not mean to do that. And that could be the start of a newfound bullish trend, which takes us for the bigger pullback, which we spoke about on the higher time frames. Gold 4-hour charts. Yeah, like I said, for gold, I don't see an opportunity just yet, but I do like the price action a lot. This market is definitely on my watch list, and I'm definitely gearing up for some buys, but I don't see anything until at least next week, because even for us to get here, if we get here by Friday, that's going to be a pretty violent retracement. I don't really like buying violent retracements. I like my retracements to be slow and corrective, kind of half the speed of the impulse move. I don't like to see price, give me a strong move within a trend and then give me a strong move back down. It kind of cancels out if the move is nice and corrective. So let's say we get an impulsive move in line with the trend, and then things start slowing down on the way back. That normally implies it's a pullback, normally implies continuation of the trend. So I want to see that kind of staggered corrective pullback. But in terms of zones to keep an eye out on, 4160, I'm keeping an eye. And this 4100 kind of zone here, as deep as 4060, to be honest, I'm very interested in. As long as the pullback's nice and healthy, yeah, whichever zones kind of show me rejection and some buying strength coming back in, I'm more than happy to jump into a trade. I don't see any gold trades now, especially for the buys, because number one, we're coming into some resistance, some supply in our left, so I don't really want to be buying into that. And number two, we're kind of a bit stretched as well, so I don't want to buy after such a strong bullish move. I want price to come back towards me, come back to support, and then look for opportunities after such a big move. I mean, doesn't mean we can't continue higher. It just, I don't think it's the optimal position. I'd rather miss out on this trade and wait for this type of setup than take 2-3 losses as price comes down and then take the win, or even another loss. There's no guarantee that price holds support there as well. I mean, intraday there might be some shorts to look into. I mean, if I dropped like a 15-minute chart, I mean, I can see price starting to break support here, resistance is holding, so there could be another swing like this, especially into the high. If we can hold that, this could be a short-term trade to look into, maybe even for tomorrow's price action. But that's kind of shorting momentum, kind of not so much calling the top, but you're looking for that counter momentum move because you think price exhausted. You're looking for the retracement, which is not a bad trade. It's just a more aggressive approach, at least in my opinion as well. Following momentum, kind of buying dips is always my more preferred trading style and trading opportunity to take. But yeah, unless you're looking for maybe some counter trend opportunities there to short gold. I say counter trend, but it's not really counter trend because the trend has been down for weeks now. But it's kind of counter momentum. I think that's a more accurate description. But yeah, the buys for me a lot deeper than I'll be interested. Yes, I can take a look at CAD Seat Chef. Absolutely. Again, if you guys do have any requests, just stick it in the chat. I'm more than happy to take a look. CAD Seat Chef, not a market which I've been super glued to this week, to be honest. It was pretty interesting last week because we just went and took out this high we came back into resistance to our left here. So it was a very interesting price for CAD CHF, especially because we spent maybe 10, 15 weeks just moving sideways. And then suddenly the past 3, we saw a lot of momentum. So I did think price was quite stretched and shorts here did look good. I was actually looking at Euro CHF for shorts last week, but I didn't take the trade because I didn't like how the candle closed, which looking back, I mean, made sense. I'm always going to get the decision right, but it would have been some nice profit on that trade. But anyway, yeah, CAD CHF. Now, again, if we look at kind of how I like to map out ranges, so finding the low, finding the high, getting the fib from the low to the high, finding that midpoint, which is kind of like our safe distance or kind of the expected area prices to get to, remove the fib. We kind of already hit the midpoint. So I don't really see much opportunity shorting again, because the whole idea is when price does hit the extreme of the range, hit the high of the range, you're expecting price to be a bit stretched. It's hit the high. It's either we're going to break out or we're not. And if price doesn't break out, it's typically going to correct and push back towards that midpoint area. So this is really where you want to take your profits. And you can see that we've kind of already done that. Price got to the high, broke through the high slightly, but eventually did recover. And then we got to the midpoint, not bang on. It's more just an area zone to keep an eye on. But we pretty much got there. So in terms of an opportunity, again, I'd like to see price really push back to highs again and then show some rejection so I can get some stops right above here and look for a similar trade, or we roll back over to support and then repeat the process and again back to the midpoint. You can see price did that on numerous occasions over here, rejecting support, back to the midpoint, rejecting support, back to the midpoint, rejecting support. We went past the midpoint. We saw a full swing on this occasion, but that midpoint is just naturally a safe place to book profits and at least remove risk as well, because you don't want to be in a situation where you've bought here, you've bought at the low, and then price is now trading into the midpoint, and then it starts to come back against you. Sure, support can hold again, but the way I see it, that's another trade. That's the second trade. This was the first trade back to the midpoint, and then you take your profits there. Maybe you leave some to run. Maybe the rest come and take you out break even. And if you see another rejection, that's the next trade. The trade isn't the full swing. The trade is betting on that support holding, and it did. So if it comes there again and it holds again, well, that's another setup, because of course it could break, and that's a different story entirely. But yeah, in terms of CAD CHF for now, I would say that's kind of, we've had our correction. Unless price comes back to the high and rejects again, we push to the low, I personally would just stay away, because we're just in the middle of the range, and that's just not the best place to be finding trades, especially placing stops either. In terms of, I saw a request for dollar CHF as well. USD CHF call for 23 entry, nice entry on gold, still holding trading stops. What's your target on that position? But yeah, really nice entry there. You can even stomach some pullback as well. In terms of dollar CHF, another Swiss pair. Now this was interesting because it's a USD pair as well, and I'm very bearish on the dollar. So I'm only really interested in selling USD. Maybe I might attempt some intraday short-term longs in USD, but the bigger positions, the one I want to hold for longer, the one I want to push, is USD shorts. Now, I don't think USD CHF is the best pair to be shorting against. I do think Euro looks a little bit cleaner. I do think dollar CAD looks a little bit better as well. But nonetheless, if USD is going to be weaker than CHF, then I do expect lower prices. But we do have a lot of support to contend with, which at the moment price is doing a pretty good job at holding. So what I'm looking for on USD CHF is hopefully another move back to resistance, because we had this resistance supply, whatever we're going to call it, zone from last week. Price had a really dramatic pullback. We tested that area, rejected it well. What I want to see is another push back into that territory. Maybe even price even taking out that wick high as well. That would be nice too. And then from here, get the sell, which hopefully we can take it back to lows. And again, even if we don't get there, even if we get to the midpoint, that's still a nice area to book some partials, or at least remove some risk from that position as well. So dollar CHF, I do see price action is really choppy right now, and I'll do my best to stay away from this. But if we were to push to the extreme up here, back to resistance, back to where all this selling pressure came from, I think this is really where you want to get involved in. Chart just got very messy there for a second. So yeah, dollar CHF, bearish bias. I like the shorts. I wouldn't be looking for any home run, even if I do get my entry up here. The reason is because this is still a massive level of support, and we have been trending to the upside for the past, few weeks now, since the low here back in Feb 2026. So basically the start of the year here. So this is still a major level of support, and I wouldn't try and push the trade past that. Even though I do think we can have a bigger pullback. I mean, if I do whip out the fib from the low here to the high, so that kind of daily swing, you do have the 0.382 in that area, but that 0.5, 0.618 area, that could be the next leg we're looking for. Nice impulse, correction, impulse, but that will rely on basically us breaking that support level, which I wouldn't guarantee. So the safe trade for me would just be a push back into that zone. Maybe we can leave a little bit to run into the next one, but yeah, I think that's the trade that I'm going to keep a close eye on. But anyway, guys, we have run out of time. I do appreciate each and every one of you tuning in. If you have enjoyed the content, make sure you drop a like on this stream. Feel free to check out my channel. I do similar content there as well. I appreciate Nick and the team for having me on the stream. Hope you guys have a great day. Enjoy your trading week. But yeah, guys, take care, and I'll see you all in the next one.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hey everyone, I am back. Hope you guys are doing well. Nothing much has happened from my understanding. Still a pretty quiet day. So let's make this fun, shall we? If you guys have any chart markups, anything that you guys want me to go over, any currency pairs, any asset really, go ahead and just drop that into the chat and I'll do my best. We can go ahead and break them down together, see the pros and cons, and go from there. Tomorrow's for tomorrow's HIN, which results are you going to since there were 3? HIN. Guys, am I missing something? Maybe you can help me out here, Michael. HIN number. I don't know what you're referring to there. HIN numbers. Maybe the employment numbers. Cat Swiss. We can look at Cat Swiss for sure. Okay, my bad. I guess I'm not up to times there. No, you're good, Michael. You're good. Okay, so for tomorrow's high impact news, what results are you going to priority? Since there were 3, I think that you have to kind of look at them as a collective. I'm gonna be focusing on the U.S. numbers, of course. You do have Canada in there as well. I think the big 2 would be the non-farm payrolls number and the unemployment rate. Those would be the big one. Okay, like that's gonna be the thing. Canadian employment numbers kind of take a back seat. It's a cherry on top if you have like something polarizing with, for example, the U.S. and Canada, then that can create something maybe. But I'm focusing on U.S. and the 2 in the U.S. are the unemployment rate and the non-farm payrolls number. Specifically, the expectations versus reality. If there is a enormous miss in either of them, that could really sway the market. If you have like something like an inline number, right? Like if it comes out like 80 or 70, 79 or 82 or whatever, and unemployment rate stays flat, then I would expect lots of volatility. Don't let the volatility scare you. Just kind of hold through it, and then likely than not, the overall trends continue. Yeah, if jobs disappoint, BOJ could step in again and unwind. That's a really great point, Sluggy. So right around over here, when you had that initial kind of wave of intervention, this was also off the backs of weakening US data, right? So like let's paint this picture here on the potential impacts of dollar yen, because I was basically talking about that before I pivoted out of my last stream. But if you guys stuck around, I was kind of mapping out the scenarios on what can happen with dollar yen here specifically, depending on what happens with NFP. Okay, so this moment right here, this candle was an intervention from the Bank of Japan, but this was going on when the war was very well inactive. Okay, so this was April 30th, and if you look at the oil chart on April 30th, if I can find it, April 30th, you were way up here in oil. Prices were they're ranging from 104 to $102 a barrel. Okay, and I say all that to say is that in this time when Bank of Japan originally went ahead and intervened to defend the 160 handle, they were intervening into strong US fundamentals. Okay. Inflation was hot, oil prices were elevated, yields were elevated, the job market still was doing okay. They were intervening, and you also too you had the dollar safe haven really kind of carrying it too. So they were intervening into a strong US dollar. And so that was a very short-lived intervention. And as you can see here, that prices just went ahead and walked all of that back and some. Now, what's different about this time around, this one here, this big candle, this was a weakening U.S. data figure, if I'm not mistaken. I forget which one it was. Help me out here, chat. I think it was PCE or PCE came in line or whatever. But this was weak U.S. fundamentals now at this point. And so now when Bank of Japan wants to intervene, they're no longer intervening into a huge, strong tide. Now you have the US fundamentals that are in line with dollar weakness. And so that makes this intervention more meaningful. And so what that means for tomorrow is that if you were to get a weaker NFP report, that is only adding to the already strong tide to the downside for US dollar, right? So like if you have that weak NFP report, you could get another wave of either Bank of Japan intervention or just weak US dollar to push this thing even lower. So that's one thing to be mindful of. Now, if you have a super strong non-farm payrolls number, well, then you have again somewhat of a similar situation like this, where you have inflation is trending lower. Don't get me wrong, but it's still elevated, and then you have a strong jobs market. This could potentially have UJ kind of walk back some of its recent developments here. Maybe not all the way to 164, but maybe back to like 160 or so. And at that case, that could present a pretty decent buy the dip opportunity, especially if you go to a 4-hour time frame. You go 4-hour time frame, you have a V-shaped recovery, right? So you're not buying a falling knife anymore, and then you would have essentially price above the 200-day moving average. And so that could be a decent like buy opportunity to at least target like 160, 160.5, 161-ish, somewhere within this area. So that's kind of what I'm looking at for as far as like Bank of Japan stuff goes. So very, very interesting topic. I love that. So thank you guys for bringing that up. But yeah, if you have a weak NFP, weak jobs numbers, that could be already within itself weaker dollar, and then Bank of Japan could even add more fuel to that by intervening at that point. 155 easy, 153, 152 easy. Beyond that, right? Like if buyers step in right here, which this would be one, if we get to 152, this would be where I would buy. I would be buying the dip here. I'd be targeting 160. I'd enter right here, have my stop below structure like at 151, for example, and then I would be targeting 160-ish, something like this. So that's a pretty, really, really good risk to reward. Now, the reason why I have my stop below structure right here at 151, if we were to get here, is because if you get taken out right there, if price continues, breaks this level and continues lower and breaks this, then you have a lot of open room to the downside. If you break that level, if you break this level right here, 150, let me do this. If you break 152 on dollar yen, then the open room is to like maybe this pocket right here, which is at 148, 149. You even have this level of long-term long-term support, long-term support all the way at 140. So this is what I'm looking at. If we get to 152, in summary, if we get to 152, I'm taking a risk-defined attempt. We'll stop right below structure, and I'm targeting 160. If 152 fails, you have so much open room that you can possibly fill 148 or even 140. At that point, I'm staying out the way and I'm buying the dip and I'm waiting for either 140 to get tagged or I'm waiting for some kind of V-shaped recovery where I'm not where I'm not trying to purchase a falling knife. So that's what I'm looking for. 157, 155 UJ, man. I hope so. I think that in the event that you were to get something like this, right? Even like 155 or even like, sorry, 152, I meant to say. Even if you get to 152 and you start like accumulating dollar yen position and you're building a decent position from like here to 160, that is, if you measure that move out there, 800 pips. So if you can stack some positions here, start building a nice, decent position, capture roughly 700 to 800 pips, because I don't expect to catch the bottom here. And my cost basis as I'm building a position probably won't be at 152. It'll probably be more like 153.5 or something like that. If you can get that, capture 750 to 700 pips worth of appreciation in dollar yen, and then it takes, who knows how long it takes to get up there. You're catching some positive swaps along the way. That is one of those trades that you wait all year for. You know what I mean? They come, every once a year you have one of these banger trades that just makes up a good amount of P&L. That would be something that I'm waiting for. And that's with the assumption of 152. If you get UJ at 154, or at 140, and you're trying to capture back at least to the 200 or something like that, that's like anywhere from 1,700 to 2,000 pips worth of appreciation plus positive swap for however long it takes to get there. So that's something that I'm patiently waiting for. I'm happy to participate at 152 or at 140. But we'll see. CAD yen, with CAD yen, I'll be honest with you. Let's look at it. It's way below the 200. Actually, you actually bring up a good point. So I'm not looking to trade CAD yen by any means. I think Canada is struggling its own battle, so it's weak within itself. So this one could really show a big move lower. But since you're bringing up CAD yen and I'm seeing that we're below the 200, I want to look at all of them. So CAD yen is below the 200. Let's look at Euro yen, below the 200. Pound yen, below the 200. Aussie yen, above the 200. Kiwi yen, still above the 200. Okay, so you have actually a pretty strong case that you're not super bearish yet. You have Kiwi yen, Aussie yen, and pound yen still above the 200. For you to really have like a really deep bearish case for example, for UJ to 140, you need to see all of those below that 200-day moving average, and you need to see more bearish technicals across the entire basket, not just dollar yen and CAD yen, but the entire basket needs to be showing lots of bullishness for the yen. But yeah, guys, I have my coffee now. I don't know if you guys are seeing a different me, but it's hitting. That was a new flavor I just tried. It's not the best. Okay, let's see. CAD Swiss. Let's look at CAD Swiss. Let's see. CAD Swiss here. It's a very choppy currency pair. Yeah, I'm not liking the technicals at all. And there's really no polarizing kind of sentiment or macro coming out of either of these countries. And that's the thing, right? Like when you're trading, the cool thing about trading currency pairs is that you're trading in pairs, right? So like if you're trading two strong things at once, price action is going to be flat. two weak things at once, it's also going to be flat. For you to find like the best opportunities, you want to find something that's like super, super strong against something that's super, super weak. Yen, dollar yen is a perfect example of this, right? Like this is the moves, the type of moves that you get when you have something super weak against something super strong. You have weakening US fundamentals right now, plus a strengthening yen. And that's why you get this, right? When you have something strong against something strong, you get this. When you have something weak against something weak, you get this, right? So it's you want to look for those polarizing opposites there. And that's what like Edge Finder helps us do, right? So you look at Edge Finder and then you look at the top setups page and you look at something bullish or bearish. And it'll tell you what's super, super strong against something super weak. It does it for you. So for example, like let's pound Swiss, right? Bullish reading. What is pound Swiss doing? Very bullish reading. Perfect. Look at that. Push higher, one directional push higher, because you have something super strong like the pound against something weak like the Swiss franc. Marco, what's up, man? How you doing?
Hello. I'm doing fine. What about you? I know you had a gold position, so that's probably doing really well.
Yeah, we got the breakout going.
Awesome.
We had some kind of a pullback here. Now, I don't know if this was it, right? So I have this level here, but I will say my levels are not perfect, but you had this level of resistance at one point. This was that original breakout level. We broke out. We pushed back lower here. I don't know if we, if this was that pullback level and if price goes higher from here, but I think that nonetheless, a pullback level to this level right here, 42.20 or even 41.20 is very probable. So we'll see. But hopefully it just keeps shooting higher from here and I keep riding that wave.
Did you trim some or just leaving it run for now?
No, I just have a stop loss at break even for this one and for euro dollar as well. So
cool. Awesome. Yeah, euro dollar is not a bad idea. I'm looking to go short on the dollar. The main thing I'm waiting on is the NFP this Friday or tomorrow and Middle East. So we were supposed to get the opening yesterday. Didn't happen. We're supposed to get the opening this week. Will it happen? I don't think so. So that is creating a bit of bullish pressure on the dollar, which makes me a bit hesitant to short at the moment. And that's why I think the dollar pairs are starting to kind of stagnate a bit. They're waiting on a resolution or some sort of news out of the Middle East. Was there anything new on that front? I didn't catch anything on financial juice.
I don't think I caught anything either.
Yep.
Some same old stuff like Yemen's about to go tear some stuff up over there. That's what I heard recently, but nothing crazy. Yeah, it wasn't even in red, so who knows if it holds any weight or not. But yeah, nothing out of the ordinary. CME Fed Watch is doing the same thing that it always does. It hasn't really moved much, so it's been pretty consistent. So market's pricing in one rate hike and then another in March of 2027. That's pretty much about it.
Yeah, I think the best edge at the moment is betting on a dovish Fed, because the market is still pricing in a hike. So the dollar is still staying elevated, you can say. But I think it's going to be a dovish event. Like last time, they hiked when inflation hit 7%. It's currently sitting at 3 point something. Will they hike into that, especially with the current rate that is restrictive? And the previous meeting that we had, I would say no, it's not going to happen. And that's a trade right there. So that's kind of what I'm waiting for. But did you find anything else that's interesting to trade?
Not really. Most of the things that I would be open to trading or like any new positions would be happening after the NFP report. So that's gonna really either continue fueling the dollar unwind or it's gonna disrupt it. Either or, I would need to be waiting for after the event. Sluggy brings up a great point, and I've been very consistent with this. I don't think the Fed's gonna hike this year. I think it's gonna be neutral. I think they're gonna try to stall as much as possible and let inflation cool down. I mean, it is cooling down. So if you continue to see that trend, then, I think that the case that I make of like it's going to be neutral, that's the hawkish stance, is neutral, I think it becomes more probable.
Yeah, and you're obviously trading that through being long on the euro dollar. Are you looking to add more risk on your dollar shorts?
The one I would be willing to potentially look at, maybe dollar Swiss. It's been holding its weight right here though. That's the only thing. Like it's been like while UJ falls off a cliff and why dollar CAD falls as well. Kind of dollar
Yep.
Swiss has been holding its weight here. So
Yep.
that's the tricky part. The only thing about this is, like, technically speaking, like, this is still a very solid level here that we've been holding for many, 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 many times. Like, if this level does hold, if you can see like momentum kind of shift, maybe you have fundamental shifting in Switzerland where like you have really, really strong Swiss fundamentals, then at that point I could really like to take this trade, especially if you continue to stay at a premium level, target the 200-day or even below, because once this thing starts flowing, it starts flowing. And like it's, I mean, you could see that we've consistently just been range bound from this level to at least like 0.785, which if I measure the move out, that is about 250 pips. I like that. So that's kind of the way. That's something new that I would take. Maybe euro dollar long if a pullback presents itself, maybe. But I kind of like how it is already, kind of just slowly grinding higher. But I'm pretty content, honestly, with my positioning. So it's an addition would be nice, but it's not really something I'm eagerly looking to do. It'll just happen if it happens.
Yep. So for the Swiss, the bearish catalyst that a lot of people are talking about is the funding currency. So we know that the yen is kind of the main currency that's considered the funding currency. So you sell the yen, you buy dollars or some sort of a risky asset with a huge return. Well, as the yen gains value, that whole thesis falls in the water because you're basically losing money as the yen goes up because you're short on the yen. So the new funding currency, which has low rates, would be the Swiss franc. So the methodology is that the yen gains value and the Swiss franc loses value. And that's why maybe going long on USD Swiss could make sense. But
Definitely.
we know that the trend with USD Swiss has been to the downside, I believe, for a long time, and it's tough to fight that. So, yeah.
Yeah, it's definitely been to the downside, and I will say though, one thing that's going for it too, like if I'm looking at this logically, if you were to get that back, that dollar strength back, yes, Swiss franc looks like a really pretty good like funding currency there. From technically speaking, you are above the 200-day moving average as well. Like you've had a pretty consistent kind of upward trend. You're above the 200. So like if you were to be breaking this level, right? I'm looking at this from the lens of downside, but if you were to break this level, then I think you open the door back to like 0.84 and you have bullish structure intact. And again, the funding currency kind of situation going. So maybe this could, I'm not going to say it's going to happen this year because things like this take long time, but maybe this could be the new dollar yen carry trade potentially.
Yep, absolutely. If the market decides to switch the yen for the Swiss franc, if the yen gains more value in the next few months, that could happen. Absolutely. What would you say today is the strongest currency? So if you wanted to be short on the dollar, so euro, okay, but alongside the euro, what would you say is strong? Because I'm struggling. If I'm being honest, I'm struggling to find a strong currency.
Probably pound.
GU? Okay.
Yeah. Yep. Let's go to, let's see, sorry. Where is it at? Macro scanners. Let's just look at recent data. It's 50%. Equal strength.
Aussie looks okay. Yeah.
Pound's neutral. I think the UK, man, like where is it at? Oh, economic data, inflation, CPI. I may be wrong. No, I mean you're seeing cooling inflation. No, maybe it's not the UK. Eurozone.
Maybe NZD.
NZD had some bad employment data though recently.
Oh yeah, But inflation is higher, I believe. Or is that unemployment? No, I think I got
Actually,
confused.
I think you're right. NTD did have one whiff of elevated inflation. My only thing is like this is only one.
Yeah.
But like if this stays
Yep.
sticky,
Yep.
then
Mhm.
then Kiwi could be the up and coming runner. But yeah, you bring up a good point. Like a good question is like, what is the strongest currency aside from the dollar? And really, I don't have an answer for that. So you do
Yeah.
have like the runner up of potentially Kiwi dollar, but in the now, right, which matters is the now. Dollar's doing quite well. So yeah, something to think about.
And the RBNZ already has a gazillion rate hikes priced in, so which is a bit tough to believe. So I think long term, actually, the New Zealand dollar is not a good pick. Aussie, maybe the Aussie. I'm gonna have to think about it. But what I actually like the most is buying gold, if I'm being honest. So gold breaking out, it's a very good sign. If you're bearish on the dollar, if you are expecting a dovish Fed, buying gold is a good idea. So on pullbacks, I will be considering to buy gold at the moment, and I can avoid maybe I can avoid all of the Middle East stuff a bit. If I move away from currencies, maybe gold can bring me some upside just because of the dovish Fed.
Yeah, I mean it's doing quite well, and again, I think gold
Yep.
right now upside is somewhat limited considering that you still have the wars is still on.
Mm-hmm.
Yes, you're going from like hawkish to neutral, but that still means like rates are still elevated and sticky there. Like unless you get money printed back on, and the question shifts from how many rate hikes are we getting to how many rate cuts are we getting, like until you make that change in narrative, then I think gold upside remains somewhat capped. Not to say that you don't see a bump right now. That I think that's probably going to happen. Like 4,500 is probably likely. You probably tap into the 200-day there. Which, why do I have it like this? I need to switch this. My bad. This is likely what I'm confirming about. So like a kind of bump up to here, the 200-day, I think makes a lot of sense. But past that,
Mm-hmm.
again, you need to have a huge narrative shift, a humongous one. Like back
Yeah.
to like this right here. This was like, cooling inflation. The jobs market was somewhat weak, 2025 going into 2026. You have no war in the background, like all that stuff. Like, so you still have a long way to go.
Yep. Yep. And you know what I just bought today?
What's up?
I bought SpaceX.
Really?
Yeah. So I can show you.
Yeah. Show me.
So if I put up my screen here, or maybe I'm already out. Let me take a look.
Was it like a scalp?
A bit of a short-term position, so bought it on the open today. The big event today is the first employee lockup opens up. So a lot of the initial back holders for SpaceX, they had, I think, a 30-day or 60-day or some sort of day lockup that they had to wait until they can sell their shares. So if you were on Twitter in the last few days, you would notice massive panic around SpaceX and people calling SpaceX going to 50 per share. And that's an awesome indicator that first, the lockup is priced in, meaning the downside has already happened right there. And second, it's a great contrarian indicator when I'm sorry to say, but the idiots on Twitter, when they're calling out SpaceX to 50, and when you see a bunch of articles from reporters calling SpaceX goes down because of the lockup expiration, well, you just have to go long. I mean, the probabilities are there. So this is a chart from Brent Donnelly, and he compared a couple of previous IPOs. So CBRS, Rubric, CRWV, and you can see T0 is basically the day where the first lockup expires. So the first employee share release, that's this line right here. And you can see how the stock basically after the IPO goes down and then kind of pivots back to the upside after that initial first employee share release. The thinking is the market is pricing in or has already priced in the release. So after that day of the release, you get a relief rally because nothing bad happens, because you don't get a huge slide in the price. That's basically the bet. So just with small size, I bought SpaceX, and I'll see what happens there.
If it's in the news, it's in the price. I love that. Well,
Yeah,
congrats, man.
basically.
I hope it works out for you. I'm like curious to see, like, from a spectator perspective, like, what is the price action for SpaceX? Like, is it gonna be one of those like not like a meme stock. I don't think a meme stock, but you know what I mean, like where the
It is a
price
meme
action is
stock.
just crazy, right? Like, you know,
Yeah.
stuff like that. Or is it going to be like one of those like slowly drifting companies? Like, what is it going to look like? I mean, just looking at this gives me some indicator of what it could look like. But
Meme
I'm
stock.
curious to see like what kind of an environment, if you are a stock equity like day trader, intraday trader, scalper type person, like if you are trying to take on SpaceX, what kind of a price action are you? What price action do you have to take on? So I'm very curious to see like this thing really develop. Like I don't know. I feel like it can go either way, man. I feel like this could either go like this or like just continue dropping off. Um,
It
Very
kind of
interesting.
looks like that. And I talked to Nick. I told Nick, could you add SpaceX to the stock box just to see what's up? And basically, he came to the conclusion that the company is not profitable, so they ain't making any money. So, like, all of the, the valuations would be negative, right?
It'll
So,
be like a bearish, very extremely bearish.
yeah, extremely bearish would be the reading probably. So it doesn't make much sense to look at SpaceX or Tesla through an FCF approach or like a spreadsheet approach. It's basically a meme stock. It trades off of the hype that Elon Musk creates. The more hype that he can create, the more rockets that he can send, the higher the price will go. So
Yeah,
that's
so
how it
that
works.
you actually bring up a good point. Nick and I had a brief discussion. I think like the question was like, how do you price that? Like, how do you price SpaceX? How do you come to the conclusion and find like how do you find good value when the traditional FCF approach is like non-existent, right? Like if you look it
Yep.
down, like how you do top down, you would get a horrendous reading. So like, how do you price that? So me personally, I'm like, I don't know, man. Like I'm like, look, give me 50% off and then I can start to like at least start to build something and then go from there. So like 50% off of the initial IPO price, that would be 76, $80. There I can like, take a stab at it and then just see what happens. If it just keeps going crazy from here, then maybe I can go deep right here to bring my cost basis lower here. Or if it kind of holds up well, then I can, depending on what the price action unfolds, I don't know what it's going to be, but that's kind of the approach I would say. So I'm like, just like 50% off. That's a good sale. Like you go to the store, 50% off, you can entertain that. If you go to the store and it's only 10% off, you're like, let me wait for Black Friday or let me wait for something else to come up for me to really start, biting there. But that's kind of my approach. But yeah, it's hard to take the traditional approach when everything's in the red.
Yeah, there has been a couple of traders trying to short Tesla because, of course, the FCF is telling you that the fair price is like 10 times below the current price because, like, compared to the other automakers, Tesla is overvalued by, I think, 10x or something crazy. And there has been people trying to short that thing, and they lost a bunch of money. So shorting hype, shorting meme stocks, shorting Elon Musk, not a good idea in my personal opinion. And I like Elon. I think he's super successful, and I've read his biography, and it's crazy what he accomplished. But it's also crazy how many like fanboys he has. I was gonna say the dirty word, but let's say fanboys, and that are keeping the stock 7x, 10x compared to other stocks in that industry.
Let me ask you one question, Marco. Like, if you liquidated everything in cash,
Okay.
and you had to bet on one single company to be your retirement stock,
Okay. Yep.
what is the one company?
Oof, Google. It's Google.
Okay.
Yeah. Probably Google. I think they have demonstrated throughout the decades that they're the biggest. They have the money, they have the power, and they're just kind of institutional. They're like a country. Almost, I'm not gonna say impossible to like liquidate, but I think Microsoft is the worst bet. I think Apple is the worst bet, especially with Steve Jobs being gone because they're not innovating anymore. Tesla is a bit of a wild bet because you have Musk, who is unpredictable, and I would say Google. But that's a great question. What about you? What would you pick?
So, like, obviously, the act of going all in one stock, someone say MSTR. Dude, you're going back to work. You're going back to McDonald's after that. If I were to speculate on one home run ticket, I might as well go crazy with it.
Okay.
I would probably pick like one of the top AI. I would probably pick like an Anthropic or something, and
You
just
wouldn't
see like
do a Sailor's Company, MicroStrategy.
maybe I'll take the inverse. That could
The
be a good
inverse.
one. Squeeze
Yeah.
them out. But yeah, that's probably what I would do is probably go Anthropic, because if I already got everything tied up into one thing and I'm not seeing any fruits from it, I'm likely just working and waiting for it to pay off. So either go all in or either home run or no home run.
So you would do a Leopold, basically.
I would do Leopold, yeah. But you know what? His portfolio's up had he not sold.
Yeah.
So
Yeah,
you
same
know
with
what I'm saying?
SBF. Sam Bankman, you know about his portfolio. If he wasn't in jail and if he was able to hold all of the holdings that he had, he would now be worth, I don't know, 10x than what he was when he went into prison. But yeah, actually, Leopold would be up if he didn't get washed out right before the Fed. So yeah, it happens.
Ken Griffin, man, stole that.
Yeah.
You know that meme from the rapper? Stole that. You don't know what to do with that.
Yeah, I know.
He stole it and he's up now. So yeah, I would pull that. I'll pull a Leopold and I'll go like Anthropic or something crazy like
Love
that.
it. Love it. It would probably
Right, man.
make a bunch of money. Yeah.
We'll
I
see.
think it's gonna go up. Yeah.
Not financial advice, and I'm not doing that, by the way. Can't even trade it. So but I'm gonna go ahead and pivot out here, Marco. Thank you for the conversation. And tomorrow's the big one, so I'm waiting for it, and it should be fun.
Yeah, tomorrow is NFP. Thank you, Alan. This was very fun, and I'm looking forward to seeing you tomorrow.
All right, man. Take it easy. Bye-bye.
See you. Bye. So let's continue with the rest of the show. The trades that I have at the moment, I have Swiss yen short, which I'm kind of betting on a prolonged strength from the yen. And I already took 60% off from this position. I have 30% running. We will see how this thing develops. Stocks, I got taken out of HP or HPE because the stop loss was hit today, but this was not a trade at the end of the A1 Discord, as this strategy is still in forward testing with smaller risk. I am in SpaceX, which is not a strategy of stock breakouts. This is a pure play. So this is a pure play on the lockup expiration and the pure play of the first employee share release, basically. So this was a trade at the end of the A1 Discord, and the target, I don't know, 130. I don't yet have a clear target, but I definitely don't plan on holding this for a very long time. Maybe we get a relief rally after we sort of have washed lower and prepared. The market has priced in the employee lockup release. So maybe we go to 130 and I can take profit on this. Or we crash below 100, in which case, well, I wouldn't be happy as far as money goes, but I would be happy that the price is going down, as this company is not making any money. So at least it would be a bit fair to the market. It's crazy to watch Tesla. Although, again, Elon Musk, I would say the most successful guy in the world, it is crazy to watch Tesla at these valuations and just beat every single other car company. And do they do anything super different? They have electric cars, which are ahead of competitors, but this is mostly hype. Okay, this is mostly hype. I do commend Musk for creating so much hype around him. That does take a lot of work as well. But long-term, Berkshire. That was a great question from Alan. I really enjoyed that. Nuclear energy is the future. Energy stock, MSTR. Yeah, MSTR was a good idea. Or selling MSTR would be a good idea. Buying Tesla without 50% discount should be a crime. Falcon 9 launch day before yesterday. NZD has potential. Yeah, so I'm looking for a currency. I am in the market for a currency to buy against the US dollar. So NZD/USD could be a play. Aussie dollar could be a play as well. But I think out of all of them, I like buying gold the most. So buying gold here, or not here, but on a pullback. It has broken out of the triangle. So it has broken out of the trend line here. Nice big breakout. Pretty significant move up. Dovish Fed, which is, I would say, the main catalyst behind the move, is a dovish Fed. So if I can get a better price, I think this is good. It bets on a weaker dollar. It bets on a dovish Fed. And maybe I can avoid the Middle East. Because unfortunately, I don't think the strait will actually open up. We were supposed to get an opening yesterday. We were supposed to get an opening by the end of this week. Nothing is really happening on that front. So yeah, I'm scouring through financial juice. I ain't seeing much. And it's Trump. And you can't trust Mr. Trump. And I just think like they won't have a deal, because we have been back and forth on the strait, on oil, on, war off from 2nd of March. So what is that? 4 or 5 months and still no deal. The strait is closed. If you want to monitor the strait traffic, you can do so on the portwatch.imf. And the latest number is just zero transit, zero volume. Okay, maybe a little bit, but nothing compared to what you got before. Do take a look. Look at this. Okay, look at the volume year to date. Yeah. I do want to mention the sponsor of today's video. If you're looking to get funded, do check out Ola Prime. So Ola Prime, 20% off with A1 Live. Okay. One thing that is really good about Ola Prime, first, the Trustpilot. Do take a look at the Ola Prime Trustpilot. Second, there is no consistency rule. Okay. We had a couple of members get payouts from Ola Prime. Max is in some sort of an inner circle in there because he was extremely successful with Ola. So yeah, we're getting a lot of traders that love the firm. With the code A1 Live, you get a great price as well. You get 20% off. So do take a look. Link is in the description. You can also find the link in the comments. I think James will post it right now. What else can we look at? Oil to 250? No, I don't think so. I think Brent goes to 100. Okay, I think Brent goes to 100. Kind of trickles up long term and stays there. I don't see a reason for Brent to just explode to, I don't know, 150 out of nowhere. But 100 is a good fair level. Like the strait is what, 15% of the volume? 20%? Actually, I think it's 10 to 15% because there has been a lot of diverging of supply through pipelines, through different routes, through trains, trucks, and any means possible. So you got some pressure relieved from the actual strait. And a lot of the countries in the Middle East are now building alternatives, alternative pipelines, alternative routes, trying to bypass the strait. Now that's all fine and dandy, but that takes years to build. So in the next few months to years, you will probably see elevated oil. Looking at the July inflation, or I was looking at Polymarket, I was looking at the NFP. Let's see, jobs added in July. Yeah, so I was looking at this. It's still pretty low volume, so it's not reliable, but the probability is 50K to 100K which kind of makes sense. It's the same that you can find on the Forex Factory calendar right there. If we go to the Edge Finder and we look at the data, labor, we look at the claims are actually on a path lower. So the last print is August 6th. That came out today. Yeah, came out today. Overall on a path lower. If we go back, let's go to years. Let's go to 2. Compared to 24 and 25, we are printing lower unemployment claims, which is good, which means that the NFP could come out strong. So could come out around 100, 85 to 100K, which is great for the US economy. For the story of a hawkish of a dovish Fed, I think it's fine as well, because the Fed is going to remain dovish no matter what. But for selling the dollar, it could be a problem. So that's why I'm a bit hesitant to sell the dollar going into the NFP. I think a better strategy is to wait for the NFP print, to wait for this week, to see if the trade possibly opens up, and then placing a sell on dollar, probably a buy on gold as well. Pair the dollar with the Aussie or with the New Zealand, something like that. So I'm still thinking about it. Max says, yeah, Ola is good. Well, great to hear that. And good luck with all of the accounts. You have a lot of funding with them. I have reached the end of my segment. You can catch me tomorrow. I'll be streaming the initial stream and the one with Alan. So we will discuss the NFP print. I wish you good luck, and do not go anywhere because you have Tiger coming on in 30 seconds. That's it. Thank you. See you.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy Thursday. Hope you're all doing well out there. I survived the storms last night. It was storming left and right, kept me up, lightning, thunder, the whole bit. But I'm still here, and I think the storms have passed. So hopefully I don't lose service periodically like I did yesterday. Guys, let me know what you're looking at. What tickers? We'll get to gold. We'll get to silver. We'll get to Andrea's favorite pound dollar. I know she'll be on. Miss Brazil over there. So any other items you guys are looking at, let me know. Well, the last couple of days came and went. Obviously, earlier in the week, we heard out of President Trump's mouth over the weekend, hey, we might have a deal very soon. We heard from Scott Bessent, hey, we could have a deal in the next day or two, but those days have come and went. So here we are back in limbo. Just right back in limbo, guys. Just yet more lip service as far as I'm concerned. I haven't seen anything today. President Trump hasn't posted anything on his Truth Social outside of some outside of some campaigns and elections we've had here lately. So So yeah, we'll just have to sit and wait, see what's going on. See what's going on with that. Might as well take a quick look at oil since we're talking about that. We did kind of bounce off of that 4-hour zone, so it's kind of giving us a little bit of a hiccup over here. And again, just in limbo. This is basically why everybody's kind of sitting and waiting to see what's gonna happen. Are we going to get that deal, or we're not going to get the deal? It is bouncing right at a put wall as well, so keep that in mind. Put wall, zone of demand. Wouldn't surprise me the least little bit if we get another little bit of a push up to the next overhead supply. So anyway, that's a look at oil. I think it pretty well fell off our bearish list. It was on there 1 or 2 days, I think it was. Yeah. So we're still back to neutral on that. But anyway, guys, just kind of skipping ahead, take a look at gold and silver. Obviously, we had that big, lovely spike yesterday. That's probably my favorite one. I'm still waiting on is that retracement down to that 2-hour zone of demand that I had identified earlier in the week. And it just so happens to be at that 50% fib line. We do have a former resistance that could potentially become support over here. So there's a lot of good things for me to like right there about that 4,160 level. I really like that. So that's going to continue to be my favorite spot as of right this moment on gold. What I like about this gold chart is the fact, well, number one, we got we broke out of that Bermuda Triangle. Okay, that was number one, and we broke through with some force yesterday. So, but when we broke out, we just missed, and I'm glad we did, but we just missed that first overhead supply, just barely. Just barely. So that's a good look for me. I like that. Meaning we did not yet start sucking up these unfilled orders from this 4-hour zone that we have over here. So that keeps this 50% fib, that keeps that 4160, that former resistance becomes support, that 2-hour demand. So that keeps that in play for me. So I'm going to stick with that for the time being as my favorite potential play. And we'll go from there. That leg out, we had a yellow volume bar. We had a red volume bar on the one right after. So it looks to me like we had quite a bit of institutional type activity that took place in the creation of that push away. And then, of course, you get the retail traders kind of stacking on top of it, just kind of gets a nice push to the upside. So that is gold, Maxie. Yeah, that's your gold for you. And again, guys, I can't repeat this enough. For me personally, I still like gold more than silver because of the higher low. Okay, the higher low, which basically was the bottom part of that triangle. We still don't have it on the daily or on silver yet. Still have a lower low. In fact, when we look at silver, the most recent impulse move we have was this bearish impulse move from this swing low to this swing high. So everything with silver right now is still taking place within the range of that area. So that's why I still need to see a breakout at minimum. If I were to be looking for a reason to buy silver, a break and close above that area. But again, and I know I've mentioned this probably too many times, but we do have that overhead supply that we have to worry about. So that's all. These are landmines, if you will, that we don't really have on gold yet. Because on gold, we have the higher low. We have the higher high. Great. Change of character to the opposite side. Did not yet bounce into that overhead resistance I mentioned. And just looking for a retracement. This is why I like gold more than silver right now. So that's going to be my look on gold. Gold for you. What's up, Jeremy? Another day in paradise. Dollar yen. Euro US dollar, says Jeremy. Yeah, let's go have a look at those. So euro dollar is on our bullish list, +7. Dollar yen is still neutral at the moment. Remember, those yen pairs have just been going crazy of late due to the rate statements, due to the yen intervention, and to mention Bessent and Trump talking about propping up the yen. So it's just all over the place. The dollar yen is. We'll take a look at it, though, first. And I kind of touched on this already, but we did have that 4-hour supply there breaking down into the 1 hour. We do have those 2 1-hour zones, kind of confluence points, both at the proximal line of the 4-hour zone and at the distal line. Proximal means close proximity. Distal means distant. Anytime you guys hear me say proximal or distal, that's just the relationship of the start and the end of the zone itself. So 1-hour zone here, 1-hour zone here, all that's inside of a day, inside of a 4-hour. And as far as the leg out, well, that leg out volume, we had that yellow bar. So that shows that the institutional activity started taking place here. Same thing on this leg out here. We got gaps on both of those on a 1 hour. We got a gap on the 4 hour as well. And most importantly, the volume is matching it. So effort is matching result, Wyckoff 101. Okay. So that's just a couple spots to look at, but I just don't yet have really a go ahead from my boss to tell me to short this thing. Right? My boss is the top setups. Edge Finder is my boss. It's awesome to have a boss because it lets them do the thinking for you. We just go find those top setups on a chart and time it. So that's dollar yen. Euro dollar you mentioned as well. Again, we're getting that bullish look. Go over here to the daily. We broke all this structures right here on the daily. Pushes higher. We broke that overhead supply. This is the one I ended on yesterday. That's right, because I had to rush through. I saw it at the very last minute. So yeah, we'll focus on this a little more for you. So what I like about this is, number one, we broke that overhead supply. Talking about this zone right here, right? We broke through that zone that had the volume start picking up. So that showed a little bit of strength. I wouldn't say like a ton, but enough to be wary of it. And we just chewed right through it. Now, just like gold, we chewed through that zone, but we did not yet touch the overhead supply. So we kind of have this open space here, this little waterfall down move that we had that I don't think is going to give us a ton of resistance. So if we do get a retracement, much like gold, back down to some of these zones of demand, then we could possibly have a play. Now, we've already technically touched this one here with that little wick right there. We just wicked into this 4 hour zone right here, this doji candle right here, the indecision candle. And that's typically what my supply and demand zones candles look like, guys. An indecision candle with wick on top, wick on bottom. The skinnier it is, the better, but I don't really worry too much about the size of the real body. Just as long as I have a wick above, a wick below, that tells me that's a lot of indecision. Okay, that's a lot of orders being thrown around. So we ultimately do get that gap out on this euro dollar trade, or the euro dollar zone, showing demand heavily exceeded supply. Not to mention the red candle, not to mention the fact that we broke through supply. So I like that. I do like that, but it's already been touched. So this kind of raises that question. Well, it's been mitigated. Can we look at it as another potential trade? Well, you know, I might have said this to you guys before, but the technical rules for demand states, supply and demand zones, state that as long as you stay in the upper half of that zone like that, which we did, we just pull that over. As long as you stay in the upper half of that zone, then you're good. You could potentially look to take a position from it, you know, deeper into the zone. I don't like doing that personally, but it does work out from time to time. So that's what the rule states. I'm just a little pickier than that. If it touches it whatsoever, I'll usually just skip it. And it's kind of hard to teach this point because there's gray area all over the place with this. It just depends on the context, how strong it might be on the edge finder, or weak if we're looking at a supply zone like this. But again, you could just, you know, you look at it as a second chance entry if it just comes a little deeper underneath the wick. Collect some more unfilled orders that are likely hanging out in the rest of that zone before getting that lift off. For me, it all has to do with the strength of the score. You know, I would consider that if the edge finder is giving me a plus 11, plus 12, plus 13, a really strong score. Euro dollar is kind of right there on that threshold for me. It's very bullish, but I like to see double-digit scoring, showing that extra bit of strength if I'm going to look at a zone a second time. Now, there was clearly some strength there because all it did was touch the zone and it did an immediate about face, go the other way, and then finally get a close above the remnants of that supply zone we talked about. So I'll consider this if the euro dollar strengthens a little bit more. Now, we have NFP coming out tomorrow. So if that's strong whatsoever, I'm ixnaying this idea. If NFP comes out tomorrow and it's really weak, well, then that'll give us then that might go a little further into strengthening euro dollar, because I think the previous NFP was weak, right? I believe it was. Let's go to the economic heat map over here. NFP, yeah, it was bearish. Well, it was bearish. So, yeah, I guess the percentages wouldn't change if it were to be weaker. But nevertheless, that would definitely give us some more strength towards the euro if it comes out bearish like it did the last time. As far as that report goes, non-farm, let's see here. Yeah, the previous 57,000, they are projecting it to go higher. So, obviously, if that thing is strong whatsoever, if it meets expectations, even if it turns that box to neutral or, obviously bullish, I'm ixnaying this idea right here, right? That's going to be a big fat X if it's bullish, if it's neutral or bullish tomorrow. But if that's the case, then I'll just wait for the alert that I have set down here at 114, because this is the zone that's closest to the swing low, swing high relationship, talking about that curve analysis. It's low on the curve, right? Low on the curve is typically where I like to find my zones. And as always, guys, I just draw up the 3 equal parts here, stay out of the middle, which clearly is where that's at. The better discount's going to be down here in the bottom third, the discount region, the discount area. That just so happens to be where that zone is. So that's why I like that zone, personally, the best. Right? That's the one I am after for euro dollar. Euro dollar. Pound dollar, its best friend. Guys, I'm still waiting. So we already touched, it's very just like what we just saw on euro dollar. It already touched the upper part of that zone, but I'm waiting on the 1 hour confluence in the middle. Remember, that's the one that gave me that lovely red candle on the volume spread analysis indicator, okay? This leg out candle, strong gap, broke structure to the top up here. We touched the 4 hour, but we missed the 1 hour by just a couple pips. Probably and likely left some stop losses here because this did create technically a new break of structure. This is technically another bullish impulse move. It's just a little high, a little higher up on the chart. Now, this is obviously in the middle. This would be considered diddling in the middle. But again, when I see a really strong red candle like that, that kind of makes me a little more lenient on the curve. Now, that's, I think, probably a little more advanced. But when in doubt, wait for the cheapest zones. That would be obviously just like what we saw for euro dollar. That would be this one down here. And then if it pierces that, well, we have another zone a little deeper on another curve. Okay, that presents this swing low and this swing high like that. So if we look at the larger swing low, swing high, bottom third, this zone qualifies. So it all has to do, guys, in general, with where is that zone in relationship, in relation to the swing lows and swing highs. That's just like a very simple way to ensure you're at least buying low or selling high, whether that trade works or not. That's about as basic, that's about as simple as it gets. So that's why I like this zone. All this nonsense down here, I think, is nonsense. You got a lot of overlapping wicks and candles. There's no gaps down here. That's my first gap right here. If I'm looking at this larger one, it's not the sexiest gap, but it is a gap nevertheless. Okay. That's the first inefficiency I see in the market right there. So that's why I picked this as opposed to any of these candles down here. Can I get an amen on that? Same thing over here. Got a gap. This gap just so happens to be at the origin of the strong move up. Okay. This one gives me a gap. It is higher up, but it has the benefit of having a very strong volume candle. Now, this one does too, but because it has that very strong volume candle on that leg out, I'm going to give it a shot. Probably won't put a full risk on it. Probably just take a little bit of risk off. And then if it gives me a loss, c'est la vie, because I got another zone waiting down here. Okay. So that's pound dollar. Nothing's really changed on that. It's just kind of went sideways over the last few days. Well, a big range of sideways. And yeah, that's where we're at. So let me see what else we got. Is there a breakout in 1 hour dollar yen? Yeah, let's go look at dollar yen again on a smaller time frame. Breakout? Are you referring to this little breakout here? Is that what you're referring to? Like towards the upside? I mean, that's a lot of pips to go. It's a pretty good amount of pips before we get to the zone. Yeah, I mean, if you're looking at it on that smaller of a time frame, yeah, by definition, it's a breakout. That's probably partially why we're getting a big spike as we speak, breaking through that structure. But for me, what is the daily doing? See, the daily, if we just kind of zoom out on the daily. Oh, that was my old chart I had up over here. Well, you can make the argument we're still on a daily high, upper or higher time frame bullish trend, right? And now we're just down again, going back to curve analysis. Swing low, swing high, back to swing low. We're in the bottom third. So you could say from that point of view, yeah, that could be it just depends on the time frame you're on. But you can make an argument and say, yeah, that might be a pretty discounted place to buy anywhere in that bottom third. And I don't know, maybe further down on a smaller time frame, we might have had a zone of demand down here. But it just got really scary when we had the intervention. And that's what this picture was over here. This was a picture from last Thursday. I don't think I showed you guys. I think I might have showed this on my other chart, my other chat. But we had that 484 pip drop, retrace 188 pips up, 133 down, 236 up, 234 down, 200 up, 168 down. All that in a span of 24 hours, guys. That was a crazy day. That was Thursday into Friday. Okay. So that's why I've stayed out of this right now. Really, a lot of the most of the end pairs, if not all of them, is I'm just waiting on things to kind of calm down. Now, what about my average true range over here? Remember, I talked about that. Prior to that intervention move, we were averaging around 70 pips range a day. We got all the way up to 130 pips, and we're still currently at 100 and we'll just call it 120 pips. So we're still almost double the average range. It's just a little too volatile for me. Little too volatile for my taste, for my strategy, guys. Maybe you guys have a different strategy than me that might work, but for the way I trade, I'm just not interested. It is giving me a -2. It's giving me clearly a -3 on the as far as the moving average crossover that I think is what Nick has built in for the trend side of things. Clearly, we have a big push down. The data does favor the yen slightly over the dollar. But then again, we're getting that mixed data because the sentiment is telling us, giving us a little bit of a bullish score. So it's just kind of all over the place. If we get a terrible NFP tomorrow, it's not going to change the percentages over here because, again, the last one was bearish as well. So we'll still maintain a 30% beat rate overall. But I just need more data. I know that's the same boring answer we give a lot, guys, but at the end of the day, sometimes we just need more data. We need more price action to do certain things, break some structures, or get a better look on this report or that report, or vice versa. So, yeah, for all those reasons, I'm out of it. But yeah, clearly, if you just take a big step back, we've clearly dropped into a discount area, and we got quite a nice wick underneath, showing some strong, reaction to dropping down into those levels. But not really enough to get me too excited because we do have that overhead supply that at this point is about 70, 80 pips away, if that. And then to the 4-hour, 1-hour confluence I talked about, those two sets of eyeballs. And it's just, yeah, it's in no man's land. It's in limbo for me. Dollar yen is. You bought CAD and made some money, Manish, after watching my strategy. Okay, well, good. Glad I could help. That'll be a 10% teacher's fee if you just go ahead and send it on to @TradeLikeATiger over on the socials. I'll be happy with that. Just kidding. Congrats on that though. Anton. Futures EU 134, 135 GU. Futures, like the futures market? Is that what you're talking about? I'll do futures. Long on dollar yen at 156.8, says Jeremy. Okay, so you went long on 156.8. All right. Or did you get like a break of this structure here or something? 4-hour chart. Looks like a 156.8. Well, yeah, good stuff. I mean, there's no denying that we had a very strong wick, even on this 4-hour. Very strong rejection times 2. So, yeah, it's not going to shock me at all. So, congrats on that. It feels like you might have caught a little bit of a falling knife, but hey, I'd rather be lucky than good any day, right? Did you have any decent demand over here? Let's go look. I didn't really dig too deep because of how volatile it was. Yeah, there's not really any inefficiency there. I don't see any inefficiency, but hey, at the end of the day, you made money. Just be careful because it was on a pretty strong downtrend with the intervention. Looking over here at Zedixe. Okay, get that taken off. So yeah, we're still kind of fighting that daily demand, the former resistance that became support to the upside. Weak data, geopolitics in limbo. And for sure, I don't really like the idea of trying to short any dollar-based assets at the moment until we kind of chewed through some of this support, guys. That's just my taste. Okay, back to the top setups. What we got at the top? We went through euro dollar, we went through pound dollar, we went through gold, pound Swiss, pound yen. Let's have a look at those for you guys real quick. Pound Swiss, yeah. Okay, so we're still quite a ways away from anything relevant as far as I'm concerned. That's pound Swiss, pound yen is broken a structure to the downside. I see. So remember, we did break this structure here, pound yen, all these yen pairs, just breaking structures and changing characters left and right. So yeah, I don't really have a play on that. It's kind of similar to dollar yen. Not really too excited about that. But you mentioned making money on dollar CAD. So let's go look at dollar CAD and dollar Swiss since they are still giving us some bearish looks. Your dollar CAD. Okay, so we had our structure, we had our trend down. We are still fighting the demand. So again, it's just a couple forces meeting each other. Lower lows, lower highs. EMA is pointing down. However, we've got the demand over here with a very strong gap up. So I would not personally want to short unless we break and close below the structure. Yeah, and I think I already touched on this. It bears repeating though, guys. You know, if we ever sound like a broken record, it's just because sometimes it's good to reinforce certain things. I don't want to short this unless we break and close down here first. Let's get through the rest of this daily nonsense, and then I can look for a retracement to a supply. Now, I drew this up, this projection line, when price was still in this area. Now, as you can see, price has come up since then and touched that same supply I was looking to short from. So it's mitigated. I have to keep that in mind. Okay. How deep into it did it go? Not too far. I mean, we're still within that 50% middle line, but we've touched it 1, 2, 3 times in a 4-hour as far as 4-hour candles. I don't know that I like that. When we looked at pound dollar, euro dollar earlier, remember it wicked in and immediately dropped. But right here, it wicked in and just kind of got sideways for a while and touched it a bunch. So I don't know that I like that picture. The only reason I liked the euro dollar was because it wicked and went. Okay, dropped and spiked. But that is not what we're seeing. On dollar CAD, at least not at the moment. Not from what I see. Well, further up, we got some mitigated supply, so I can't utilize that. We'll see. That's a 4-hour chart. What if I divide 4 by 4, it comes up with 1, so I got 1 hour. Might even get a 2-hour chart. Yeah, here we go. So inside of the 4, we have a 2. That's another set of eyeballs, guys. It's a little more obscure, the 2-hour chart is, but it's used more than you think. So that one has not been touched yet. That's still fresh. What about the 1 hour? Yeah, the 1 hour is a little messier, but by definition, you could even draw that to here or just leave it there, just leave it put. So basically, you got a 2-hour, 1 hour confluence a little higher, but can't really utilize the 4-hour anymore. So at this point, I got to wait for the bounce of the 2 and the 1 hour. Okay. So that's probably what I would look at if we break and close below the demand first. Okay. So I'm not even going to fool with an alert on that until we break a structure. Dollar Swiss was our other bearish idea. And just as always, taking a look from the trend to the start. Did I get my death cross yet? No, I didn't. So at the moment, it's very, oh, wow. How about this? 4 pipettes difference between the moving averages. The 8 is still above. So I need the 8 to comfortably close below. So this is going to take for me probably the rest of the day, probably tomorrow as well. This would probably be something I would look at on Sunday night here in the States, Monday morning, whenever the liquidity pops in. I want to see a breakdown of this as well before I look for any supply. Got some supply a little higher up, but just like I drew here, let's break this structure on this yellow projection candle, and then we can look for a retracement and try to find a zone. Okay, so I don't have a play on that either. Now I can get super aggressive, and if it retraces to the zone right away, take a short, but I don't like fighting the trend. I just don't like it. That is close enough. The alligator did close its mouth, so perhaps a very small risk just to see, but that's kind of like stopping a rocket ship. It's the opposite of catching a falling knife. I just don't know that I'm too excited about that. Anyway, that's some of the main bearish and bullish pairs I'm looking at from a supply and demand level. Guys, keep in mind, Nick does have his code A1 live for Ola Prime. If you are looking to pick you up a new account, a new trading account, all the rules are listed there, quite transparent, very fast payouts. I think yesterday I said 13 minutes, 27 seconds, something like that. So they're very quick. And during that 6-month period where Deloitte came in and did their little study and, you know, opened up the books and everything, there were 0 denials for all the ones that were turned in that where they followed the rules to a T. That's the key, is the rules, guys. When a lot of firms, and some of them for good reasons, a lot of them get a bad rap just because, you know, it's the public's word against theirs. There's thousands of traders using their products. And a lot of times they say they screwed them over and this and that. But a big bulk of the time, because I saw it from the inside, it's just simply they didn't pass a rule. They failed the consistency rule, or they failed this or that, or a YOLO trade, or they had a 2% loss in one trade. They exceeded the daily 5%, or whatever the case is. So keep that in mind too when you're looking at ratings on things. You got to dig into the details of, okay, did they actually, are they being truthful, or did they actually break a rule and they just got butthurt about it? That's a real thing, guys. The customer, they say, is always right, but not always when it comes to whether or not they pass their rules. So keep that stuff in mind. But yeah, definitely utilize rating sites, ranking sites to dig deeper into not only Ola Prime, but anybody else. So guys, it's already the end of my show. Have a wonderful day. Stay safe out there and get ready for NFP Friday. Peace.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.